All right. Hello, everybody. Welcome back to another episode of the Market Close. It is finally the day where we find out what is going on with these tariffs. April 2nd is here at about 4 p.m. approximately. We don't know exactly if it'll start at 4 p.m., but we'll be live covering whenever it does start. Trump will be at the Rose Garden, and he will be officially unveiling his tariff plans. We got a lot of headlines in the past, quite honestly, 3 hours around details on these headlines. Some of them may be true, some of them may be not true. But we got a lot of stuff to talk about and go through before we get the official announcement. I think the market has a pretty good grasp on what these tariffs are going to look like. And if there's anything that deviates away from these tariffs, then obviously we'll see it reflected in the stock prices. I'm not muted. You guys can try to do whatever you want. I'm not muted. There's no way I'm muted. I'm going to check anyway, just to make sure that there's no way I'm muted. Yeah, I'm not muted, bro. I need to stop checking. I'm doubting myself too much about this. You guys are gonna do this every day. It's gonna be April Fool's every day with this joke. Anyway, we're gonna talk about the different implications that the stock market is gonna have in regards to the perceived tariffs that have been announced today. We got some TikTok updates that we got to talk about. That's also important. It does seem like Trump will be announcing a plan with TikTok, which he said he was going to announce pretty soon. TikTok expires in terms of the extension on April 5th. It's April 2nd, so probably has to address that. That'll happen tonight, most likely. And then CBS is reporting the External Revenue Service also is going to be announced today, which makes sense because the tariff revenue is going to be collected via some type of agency, which in this case would be the ERS, External Revenue Service. So we're going to see what Trump announces from that perspective, and then ultimately how the tariffs are implemented as we get into the day. Yes, Tom Lee will be joining at 5 p.m. That's the time we have him scheduled for. So 5 p.m. he'll be on live via audio with myself and Evan, a good friend of mine on Twitter. So most likely 5 p.m. That might be a little late. It just depends on his schedule. But yes, 5 p.m. he should be live, and we'll get his raw reaction to tariffs. All right, let's get into it. We are here early today to get into some of this analysis, and then we'll get started in about 25 minutes with the actual tariff announcements from Trump. Thank you, everybody, for being here. So first of all, I think we should get started with Tessie. Tessie, 282.82 on Tesla. This stock is up 6% on the day. Obviously, the market is not having too bad of a day. It's been a little bit of a choppy market, but overall rather green. S&P 500 right there at 564. You got Tesla that goes green, Hood goes green, Palantir goes green, Grab is green, Rocket Lab's green, Reddit's green, Uber's green. So you got a lot of different stocks that are green, even with some stocks like Google being down. Newsmax, by the way, yeah, that IPO, I really wish we could have bought puts on it, but down 80% in a day. I mean, I think everyone expected it, probably deserves to go down another 20, 30%, but it is down 80% from those highs of 280 that it was at yesterday, now at 48.66. In the context of Tesla, what's so exciting about this? Well, there's a couple pieces of analysis here that I think are really important. Number one is, the deliveries numbers sucked, right? 336,000 versus the most modest expectations of 360,000. So you had some pretty crappy delivery numbers. It fell 5%, which initially, as soon as we saw that reaction, it wasn't that surprising. It was just like, okay, 5% down. That's a regular day for Tesla. That's not that serious. So the 5% reaction to the downside kind of highlighted that a lot of the bad news, given Tesla stock is down about 45% from the highs of 487, is priced in. We did have an Optimus video today. You had some buzz on Twitter about Optimus. Maybe there's going to be some Optimus orders or deposits that Tesla's going to unveil soon. So that could have led to a little bit of hype. But overall, the auto delivery numbers being worse than expectations just was not interpreted as that bad by the street. And then you had a report come out from Politico, which really spiked the stock up another 3% after it did a V-shape and went green, but then it went up about 3 to 4% after this report came out, which was from Politico saying that Elon's leaving Doge. Or it's not that he's leaving Doge, but he's not going to have an active role in Doge. He's going back to Tesla. That's when the stock went to about 275, 276, and then it really started moving throughout the rest of the day. However, White House press secretary Caroline Leavitt came out and said, this is garbage. Elon Musk and President Trump have both publicly stated that Elon will depart from public service as a special government employee when his incredible work at Doge is complete. Now, I don't know, right? Like, I mean, there's a lot of momentum behind those reports. I mean, really, the stock started getting real strong, serious volume and strength behind it. If you just look at some of the order flows, when this article came out that Elon is officially deciding that his inner circle is going to be managing Doge, the infrastructure he set up for Doge is enough to get the job done, and he's going to head back to Tesla. You had a lot of analysts like Dan Ives saying this is a really good development. He was really pissed off in the morning, got these delivery numbers. I don't know if exactly if this is true or not. I think Elon's not necessarily leaving Doge yet. I think maybe he's going to play a little bit less of an active role and not be in DC every single day. But that was the first piece of news that really got Tesla excited after those delivery numbers. And obviously investors rewarded Tesla with that stock continuing to go higher. Yeah, so he has a 130-day term, which is ending soon anyway. Now, Doge has a 2026 term. July 4th, 2026 is when Doge is complete as per the bylaws of when it was created. Elon is supposed to leave in 130 days, which is coming up pretty soon. So technically, the Politico report might be correct that Elon's getting ready to leave. And that's why I think the stock is maintaining its momentum. Because if the press secretary comes out and says, hey, this report is bullshit, and then the stock continues to be up 6%, obviously the market does not think it's BS. The market thinks that, no, there's probably some truth to the fact that Elon's leaving. He's going back to Tesla, and Doge will be able to function without him being there day to day. So that's why you got Tesla up 283. Currently right now up 5.5%. Again, an incredible reversal. If you're a Tesla investor, I think you should feel pretty damn bullish. Basically, Tesla got right back to my average right here. My average is at 288. It's at 283. And it's quite interesting to kind of see how the story has played out over the past couple of not only weeks, but really past couple of hours, because those delivery numbers, I thought Tesla would be down 15, 20%. Apparently not. Apparently the market had it kind of priced in right here. So that's what we got in the context of Tesla. And I think that's kind of the big mover for today. Obviously, the tariffs are going to definitely impact Tesla and a variety of tech stocks after hours. The QQQ NASDAQ up about 1% on the day. Robin it up 1.35%. Palantir up 2.45%. But we will get more details at 4 p.m. NVIDIA kind of flat on the day, 110. It got to 112 at one point, now stuck at 110. So NVIDIA not really getting any momentum based on headlines or based on this Tesla excitement. Really, Tesla's been carrying the NASDAQ today, but not NVIDIA. If we look at the other Max 7, which we have some headlines on in a second, we'll talk about that after tariffs. Meta is down about 1/3%. Google's down a little bit. Amazon's up 2.3%. We'll talk about why in a second. Tesla again up 5%. NVIDIA flat. Microsoft 0.27%. And then Apple 0.3% on the day. Okay, why is Amazon up? Well, that gets us into our next set of stories. Going back to TikTok, Amazon an hour ago put in a bid to buy TikTok. AppLovin 30 minutes ago put in a bid to buy TikTok. OnlyFans 35 minutes ago put in a bid to buy TikTok. So obviously these are last minute buyers that are coming in trying to get a little bit of TikTok. And the reason I think Amazon was up today, now maybe Amazon's just kind of moving with the broader market, because I think no one realistically thinks that Amazon is going to buy TikTok. But I mean, if Amazon had TikTok, could you imagine having 170 million monthly active users and then just being able to sell products through Amazon via TikTok? Like, obviously that would be very beneficial for their business. And then, I mean, OnlyFans buying TikTok is kind of a joke, but the fact that they put in a bid means that the White House probably said, hey, give us your best offer. You got 30 minutes. We're about to sell this puppy. And so whoever wants to submit a bid can submit a bid. And so we had some headlines around what's going on with TikTok. Now, this is the most realistic one that I think is happening right here. A group including Andreessen Horowitz and Blackstone are going to own 50% of TikTok, and Oracle would secure TikTok's data as a part of the deal. That is what the Financial Times has reported in the past 15 minutes. And if we go a little bit more deeper on this, the information also contributed to this report. They say the proposal would create a new US-based entity, which would own 50% of TikTok via American investors. It would license the algorithm from ByteDance, and it would leave ByteDance, which is the Chinese parent company of TikTok, with a 19.9% stake, just under 20%, which was set by the last year's sell or ban law. Trump may consider this a qualified divestiture, and the deal has a 90 to 120-day timeline to close. So these are the details of what this TikTok plan would look like. Andreessen Horowitz, for those that don't know, is a major VC firm. Blackstone, a major private equity firm. Oracle, obviously a major data center company. There's so many different companies, I think, that would be in this conglomerate that would kind of put their bid in to own this 50% stake of TikTok. But that would keep TikTok's valuation, which is, I think, closing in on $300 billion something elevated. Obviously, if America banned it, that valuation probably gets cut more than half, because those are some of the most valuable users for TikTok. And so as a result, TikTok continues to maintain its momentum. And potentially, I think Trump might mention that the sovereign wealth fund that the U.S. has signed via executive order last month of creating, that might own a portion of the 50% or be an investor within all the other entities that are controlling that 50% stake of TikTok. And he might announce that today and try to make a big deal out of that as well. I did place a bid as well. My bid was rejected. I'm investing in another startup. excited to tell you guys about it. I'm only putting in $5,000. But it's a really, really interesting startup. I can't say enough about that yet, but I got the paperwork today. So yeah, I'm trying to hope the private market's a little bit better than the public markets, but yeah, you guys will hear about, I think they're going to finish their raise at basically in like a couple months by July. It's $100 million valuation. So yeah, I'm investing in a small cap that probably could go to zero, but hopefully it doesn't. So no TikTok for me, but it does look like TikTok's going to get a lot more momentum from some of these other investors. Then we had Mark Zuckerberg. Who's that? It's not a Grindr competitor. Goodness gracious, dude. It's not a freaking Grindr. You guys are, although if anyone's building one, message me on them. I would just be curious to see what you're building. Anyway, Wall Street Journal reports Meta CEO Zuckerberg is lobbying Trump. He was at the White House today to settle the FTC's antitrust case and avoid a trial set for April 14th. I didn't even know there was an antitrust case against Meta, but it makes sense that there was. The FTC could seek divestitures of WhatsApp and Instagram if this case actually does go to trial, which would be horrendous for Meta. I mean, you talk about Google that had this horrible DOJ is going to break them up type of narrative. Could you imagine if they took Zuckerberg to Congress and got rid of WhatsApp and freaking Instagram? Like, there is no Meta at that point. Like, WhatsApp is still so under monetized. There's billions of users on that thing. Instagram has been a money printer for them. That would be horrible if they had to divest it, in my opinion, just like it would be horrible for Google to divest out of Chrome and Android and YouTube. So Zuckerberg was at the White House today. He was spotted at the West Wing. And then the Wall Street Journal ultimately reported that he is there to continue lobbying Trump. That's another reason why UFC's Dana White is probably on the board of directors. He's probably getting Dana White to send some messages to Trump. I mean, all of this seems very calculated right here. And it looks like Zuckerberg is trying to save the company and not deal with the narrative that's going on with Google. That probably to this day is still haunting them in regards to the DOJ potentially breaking them up. So that's what we got in the context of Tesla. Yeah, this headline was here this morning as well. NVIDIA secured $16 billion worth of GPU sales from Alibaba and ByteDance before the Trump-China tariffs. I saw this headline right after the market opened. So this was in the middle of the day, but bullish NVIDIA. Stock market probably doesn't care that NVIDIA got another $16 billion, but they did get those in right before GPU sales would be tariffed with external tariff restrictions and controls that the Trump administration is going to put on the semiconductor companies. This is also before the Chinese government institutes a energy policy that last week it took NVIDIA down about 5% on this headline, where because the GPUs are so energy intensive, China wants tech companies like Alibaba and ByteDance, Tencent, et cetera, to buy from Huawei, which are architected in a way that aren't as energy intensive. I think that's kind of BS. I don't think the CCP actually cares that much about the environment, but it was something that they had to do probably to combat a little bit more of NVIDIA's dominance. So that's what we got in the context of NVIDIA. Are you live streaming Trump? Yes, every single day I am live streaming Trump because Trump goes live more than me. So yes, I will be live streaming Trump if he goes live in 15 minutes. It's probably going to be a little bit late, but we'll see at 4 p.m. if he goes live. Okay, now here's the major tariff update, which was the leak from Sky News. Take this with a grain of salt. This might be accurate. This might not be accurate. But here is the major leak of what the market might be pricing in going into tariffs. A source close to the White House has told our economics and data editor that there will be separate bands of tariffs, 10%, 15%, and 20%. Kind of what the Wall Street Journal said on Sunday. The bands will differ both by country and by industry. So not necessarily universal. They're going to be specific to location and then specific to sector. The specific band each country or industry is placed into will depend on how the White House views each country's barriers to entry for trade. They added how a tariff is defined is open to interpretation. I think that makes sense. Trump's probably not going to have some rigid definition on the concept of a tariff. And then Trump wants to mirror tariffs imposed by countries on U.S. imports, but the UK's 20% VAT rate could, for the White House, count as a tariff. So we are going to get a lot of details, obviously in the next 15 minutes whenever Trump goes live. But this is the perceived argument that I think the market is pricing in for tariffs, which is pretty much consistent with what we've been looking at for the past 3 weeks now. There's going to be different levels of tariffs. They're going to differ by industry. Autos and semis and pharmaceuticals are going to get different tariffs than soybeans, for example. And then there's going to be differences by countries. Different countries that have been more ruthless with their tariffs to the United States are probably going to get harder tariffs from a reciprocal perspective. And other countries that are a bit more lenient with tariffs might not get as aggressive as those tariffs being imposed on them. I'm pretty sure this is what the administration is going to announce today. Like, if anyone has anything that different to announce, to ponder about, let me know. But this is what it seems like it's going to be. And if that's the case, Tesla right here, 281, NVIDIA just turning green, Amazon trying to get back to 200. If that's the case, it feels like today is going to be a nothing burger. It really does. I mean, look at Bitcoin. Bitcoin's up 3% on the day, 86.5. This is, one of the most risk-on assets in the market. If the market was really that afraid of these tariffs causing some global recession and needing to be afraid about all this stuff, I don't think we would see the market acting the way it is. Now, we did get private payrolls this morning that came in at 155,000 versus 120,000 expected. So that was a big beat, which is not the best for inflation, but it is really good for the broader earnings picture, because more people having jobs, more people spending money is good. But again, it goes back to this larger argument that is not recessionary. Now, maybe the tariffs are so extreme today that it makes the market feel it's recessionary. But given Bitcoin is up right now, given freaking Tesla's up 5% after those delivery numbers, it's just hard to imagine that whatever Trump says today is going to be so fundamentally different than what a lot of these news outlets are reporting right now. Palantir 89. Wow, look at that. By the way, those Palantir puts, let me check the volume on them. If you're monitoring it, it's April 25th, $60 strike. Palantir right here up 2.85% on the day. Those puts have traded, 94,000 times today. The open interest is 183,000. Volume, which is the amount of time they were traded today, 94,000. That's weird, right? Like that's not for any of the other strikes other than that $60 put. Yesterday was 172,000 was the volume. Today it's 90,000, and the open interest went from 24,000 to 183,000. Even though those puts are down 32% on the day because Palantir's up. It's weird, right? It's really, really weird. And I don't know what's going on here, but that's something we got to keep an eye on. Either there's a short report coming, or I am not convinced that's just basic hedging. Like I think that's a lot more aggressive of a premium that's that specific option chain. And we might see something a little bit more happening right there in the context of Palantir. All right, let's hear from Tom Lee. So he'll be on the show anyway in a little bit, but let's get some thoughts from him. He was just on CNBC as well. And then we will keep going from there. Trump should be live in about 15 minutes.
To have you both with us. Tom, I know you agree with a large part of what the professor said. That's what you're trying to do and impart on our investing audience. Those are the headlines from the notes that you continue to put out. Tough now, better later. Invest for the longer term this year.
That's right. We don't want investors to be panicking now or rage selling. We've had a very painful drawdown, and I know we're facing this huge uncertainty that may not end tomorrow, might last months. But like the other declines in stocks, like the one last year or the ones in 2022, the ones who could endure that short-term pain and took advantage of those declines are going to have good opportunities.
Yeah, what if things are different, though, this time? That these tariffs are going to be a favored measure by this president, whether they're permanent, temporary, months, years, no one really knows. They're not going to be a day. You know that.
Yeah, listen, across the street, every big bank, every medium-sized bank, I'm sure Fundstrat have hosted calls with their clients to discuss what they expect for tariff. And I've been on a couple of those calls, and there's universal, complete uncertainty as to what's going to be announced in even 45 minutes time, let alone 45 days time.
Here's what Tom had to say about Tesla and some of these tech stocks as well.
Well, it's definitely welcome from shareholders, because I've had a lot of shareholders tell us they want to see Elon Musk go back to Tesla. But I think it's very encouraging to see the stock price rise on a really bad delivery number, because as you know, stocks rising on bad news is a sign that a lot of bad news is priced in, and arguably the bottom.
Yeah, it does raise, not only this issue, you could take this as, okay, Mag 7, this stock's done terrible. It's done a lot worse than many of the other Mag 7 names, which haven't done well in their own right. Dan, is that going to change anytime soon? Do you think the performance of these large cap tech stocks?
Well, listen, I think they're down, depending on your measure, 20 to 25% from the highs on a lot of nothing. I think there's a lot of concern in the AI space on what DeepSeek means, AI overcapacity, et cetera, et cetera. Again, I'm not a big tech investor, and Solus is not, but I haven't seen too many headlines that suggest that any downside is coming. In fact, I've seen the opposite.
And I agree. I mean, a lot of the downside on tech stocks we know has been relatively unjustifiable if we look at NVIDIA, the way it's trading compared to some of these other companies like Costco. But market sentiment is what market sentiment is. We just got an update from Elon right here, folks. Elon says, yup, this is fake news. So the scoop we talked about from Politico 20 minutes ago, about Elon's going to be leaving Doge and returning back to Tesla. So the press secretary at the White House said this is garbage. Elon just 10 minutes ago said, yes, fake news. I wonder if the stock is down on that. No, the stock is fine. Stock's up 5%. Dude, like, you've got to be pretty damn bullish around this Tesla price action right here, because for Elon to deny that he's not leaving Doge, or at least the way that Politico reported it, is technically bearish, right? Because the reason the stock really surged 3 hours ago was because of that report that Elon's coming back home. Bloomberg did a report on it. Gary Black, Gene Munster, Dan Ives, all the big Tesla analysts were like, yes, finally, he's coming back home. And then Elon just said 10 minutes ago, nope, fake news. I'm not leaving. And the stock still is not really moving to the downside yet. So I think this price action is very, very encouraging. I agree with Tom here that it does feel a little bit like the bottom is in, or at least a lot of bad news is priced in, even if this is not the bottom. Granted, Tom Lee did say last week, the V shape will start with Tesla. And I was a bit skeptical of that. That's one of the things I'm going to be asking him about today, why exactly he thinks it's going to be led with Tesla. But I'm a bit skeptical that the V shape is necessarily going to be led with Tesla. Granted, Tom's argument is that it's down enough for the market to finally feel that we can start moving forward. I guess after April 2nd, we will find out how this plays out. Yes, I'm not leaving, says Elon Musk. That is correct. Dude, a lot of people were ready for him to leave today. I mean, this report, just the virality of this report based on the fact that Elon's finally coming back. Well, he shut that down just now. And he says that's not happening. That's not happening yet. And also, when I saw the report, I also felt it was kind of BS, because I was like, he's at Doge every day. He's meeting with Pete Hegseth. He was at the CIA. I'm like, why would he leave? Like, he seems pretty committed, and he, quite frankly, doesn't seem like he cares at all about the stock. So, like, that's not, I think, his motivating reason to leave. As much as he loves Tesla, I think it's pretty obvious he does not care enough. He does not care as much about the stock as he cares about the deficit. So it was weird when that report came out, but Elon right here kind of confirming that's not going to be the case. Let's get a little bit of a listen from the professor on what he thinks is going to happen in the context of tariffs. And then we will get ready to see Trump talking, hopefully in about 5 minutes, on this new tariff policy.
Important factor will be how he positions renegotiation. In other words, a willingness. I will enter a negotiation. This is my starting point. If you lower on our exports, I will consider lowering on your exports. I think that would be received very favorably. Now, of course, that is a process. But I think if we can tell by his language or his body language or how the other officials are going to be talking about potential reductions in response to a mutual lowering of tariffs, I think it will be taken well by the market. If he seems very rigid and at levels over 15%, I don't think it'll be taken well by the market.
How much damage do you think's already been done from the uncertainty? There are some who think that you can get past this. There are others like Tony Pasquarello, Goldman Sachs, who say the game's changed in the market. And now it's all about the preservation of capital because of this uncertainty and what's going to happen, even with more certainty of tariffs that are going to be punitive.
Yes, because even if, we know, for instance, if there's 20%, we really don't know what kind of a reduction in GDP that will entail. And the ramifications are very strong. I mean, we already see a big decline in travel by foreigners into the United States. I mean, that hits the service sector. There may be some boycotts of U.S. goods. And of course, the big wild card, Scott, as we all know, is the potential retaliation. And, if he sounds rigid and we hear tomorrow from the EU, Canada, and or Mexico, okay, now these are our tariffs, that is definitely going to be a negative shock for the market. So, there is definitely potential downside. Flexibility, negotiate. Listen, if we could all negotiate to a zero tariff level, at one point I remember Trump saying, well, maybe if everyone had zero, I could take that. That would be ideal, but it seems to be far away at this point.
All right, we got 4 minutes. 4 minutes left. I don't think it's going to start exactly at 4 p.m. This is what the scene looks like right here. It's at the Rose Garden. You got the flags in the background. You have a bunch of different workers from sectors that are in attendance. We'll hear a little update on this, and hopefully in the next 5 minutes it starts, but it might be a little bit later at around 4:10.
Been waiting for less than an hour now until that Rose Garden ceremony, where we'll finally hear from the president, who has made his decision now on just how he wants to proceed on the reciprocal tariffs. The Rose Garden is all set up, about 150 seats there for steel workers, auto workers, manufacturers who will be in attendance for that. I'm told the president now is just focused on finalizing his speech. We only have a few hard details, though, on what the decision will look like. One is that the tariffs are set to take effect immediately. Everything being announced today should take effect maybe at midnight, maybe sometime tomorrow. They start being collected. We also know that Treasury Secretary Scott Bessent was on the Hill yesterday telling lawmakers that these tariffs are set to be the maximum level, that they will be negotiated downwards from here. I will caution though, Scott, there is some skepticism around that, especially if the president looks to respond to some retaliation that we do expect from trading partners, depending on what we hear today. And then as for exactly what's going to happen, we know the president has been weighing sort of a menu of options that range from the more extreme on one side, that blanket tariff as high as 20%, a lower than 20% blanket tariff on a smaller subset of countries. I've been told those two options are seen as less likely than potentially the other ones on the table, one of them being tiered tariff rates, something like 10, 15, and 20% for countries to qualify for one of those, or those customized country by country rates. So less than an hour now, and we will find out. But Scott, I can say that what they've been weighing here, and the reason this decision has really come down to the wire, is we know that they've been looking on one hand to satisfy a president that has wanted to go big, broad, and simple on this, trying to keep things simple for the markets while also minimizing economic impact and market impact as well. They've been looking for that middle of the road, and in an hour from now, we'll find out whether they've hit it. Scott?
And we'll see if they can pull it off. Megan, thank you.
All right, here we go. Trump is not live yet. I do not see him live. For those saying he is live, he's not live. I have a bunch of streams open, and he is not live yet. I don't know if exactly it's going to be at 4 p.m., but it will be beginning. Okay, the White House has their stream set up. All right, so I don't think we're going to have to wait too long. I don't think it's going to be like a 30, 40-minute delay. It should be in the next 5 to 10 minutes, hopefully. Here we go. 1 more minute until we get liberated, or rather liquidated. Speaking of liquidation, I should probably take a sip of some water, you know? Okay, my hands are too sweaty. I can't even open the thing. Dude, you see my hand? That's how you know I'm nervous. My hands are sweaty. I have to use my shirt to open this thing. All right, here we go. I'm not sponsored. I'm just hopping on the trend. It's good water, though. It's really good water. It's very good water. Saratoga. All right, here we go. Here we go. 30 seconds, baby. Markets relatively green. You guys voted 55% pump versus 45% dump. All right, so the majority of you think we pump on this. Look, my vote's pump. I think it, and I don't know if we get like some massive 3 or 4% pump. I just don't think we're going to necessarily dump because I think it's priced in. Maybe I'll be wrong. I'll probably be wrong, but let's see how this ends up playing out in the next 5 minutes. We should get some answers to see what ends up happening here. All right, 4 p.m. Wednesday. It's either liberation or liquidation. Thank you, everybody, for being here. The stock market is now closed. All right, now we wait. Dude, there's like earnings. Like when we do Palantir earnings or NVIDIA earnings, then we just have to wait those 5 minutes to see what ends up happening. He's not live yet. I will switch as soon as he goes live. He is not live yet, but he should be soon. And then we're going to see what happens here. S&P 500 was up 0.645% on the day. NVIDIA was up 0.25%. Tesla, 282. That's up 5.33% of the day. Palantir, 3.27%. Celsius was up 3%. Costco was up 1%. Newsmax was down 77%. This is very healthy. And it's nice to see that this thing is not continuing to pump for no reason. I think it's the signs of a healthier market, even if the market wanted to be a little crazy yesterday. So that one's down about 77%. Google was down about 0.02% on the day. Baba was down about 2%. Robinhood was up 1.23%. Grab was up 1.32%. Rocket Lab up 7% on the day. Not bad for Rocket Lab. Meta right here, 583. That was flat. Rocket Company's up 10% on the day. They acquired a company on Monday, so market giving them a little bit of momentum from that. SoFi was up 4% on the day as well. Not bad. BlackBerry was down 9%. Could not really get too much of a recovery, but BlackBerry was down on some not good earnings. Walmart right here was up 1% of the day. Again, Walmart, Target, Home Depot, Lowe's, these companies should not be going up if there's some massive recession coming. I mean, you should be pricing in the consumer is going to be tight and they're not going to spend. But so far, honestly, for the past 5 years, the consumer has been spending. So the market is choosing to bet that the consumer, especially in the United States, we are a nation of consumers, will continue to spend. Palantir end of the day up 3.27%. That's down about 0.32% after hours here right now. RCAT's up 16%. All right, I didn't look at that one today. Red Cat right here. They had earnings, I think, on Monday. Yeah, 16%. Not bad at all. So that one had a pretty good day. Tesla right here, still up after hours. 284 on Tessie. 284 on Tessie. Trump is still not live yet. It should be, again, I think by like 4:10, the latest. But their stream is already up. And usually when their stream is up, that means that they're getting ready. Shout out to Farzad. He says, like and subscribe before Trump sells America out. Oh boy, we are going to see what Trump announces today. Again, I think the three things that you should be all looking for: external revenue service announcement to collect the tariffs. Number two, a agreement on how the United States is going to be purchasing 50% of TikTok and what entity or group of entities are going to be involved to be able to make that purchase. And then number three is a three-pronged approach to tariffs: 10%, 15%, and 20%. Those are the details we have. And then sector by sector, country by country implementation of those tariffs. I think those are the three big announcements we're going to be looking for. And that's what we're going to have to see later today in terms of how this plays out. Danny says, watch him say no tariffs. If he comes out and he says, yeah, I was kidding about, we're not doing any tariffs. We're just, that would be insane, bro. Insane. But I don't think that's going to happen. I think it's time to get some tariffs. It's time to get some tariffs. Lila says, I'm back from hiding behind the sofa, but I do have a cushion. Hi, Amit. Okay, let me ask another poll. 56% of you say pump. Here's a better question. Yeah, imagine this was an April Fool's joke around tariffs. Are you nervous or relaxed? Are you nervous or relaxed? I would say I'm a bit of both, but I'm a bit more relaxed than nervous just because I think it's priced in. I don't think it's going to be that bad. But it's Trump, and you just never freaking know with what happens with Trump. Honestly, given how bullish we went towards the end of the day, the contrarian move would be that this thing dumps and S&P's down 2% tomorrow. But I think it's got to be an announcement. Celsius, by the way, was up 3% of the day. It's got to be an announcement that was so left field that no one expected it. And I just don't think, given all the leaks we've heard, given what we heard from Besant and Lutnick over the past couple of days, Besant literally said, hey, there's going to be a cap on the tariffs when we announce them, which means they're likely not going to get that much higher. I mean, I don't think the market should be that surprised from what we see. Trump is still not live right now. I did compile a list while we're waiting of this. I talked about this in the morning, but I compiled this list today. So this is the list of countries that have pseudo capitulated when it comes to tariffs. Israel, yesterday, they indicated that they've dropped tariffs in different sectors to avoid reciprocal measures. India, we still have a bunch of tariffs from India, but they announced reductions of billions on tariffs, building on earlier cuts that they made last month. Canada today expressed willingness to remove retaliatory tariffs after initial resistance. Ontario Premier Doug Ford was on CNBC today, and he quite literally said, quote unquote, we'd be willing to drop our tariffs tomorrow if Trump takes away his tariffs. So you got Ontario ready to say, hey, we don't really need to get into this trade war. And then Vietnam this morning confirmed it has dropped tariffs on U.S. goods, aligning with Trump's pressure to level trade imbalances. So you have some examples, as you're seeing right here on the screen, of countries that have decided it's not worth getting into a trade war for. I guess we'll have to see over the coming weeks and months if other countries join. But to an extent, so far, it's kind of working. I don't know if the EU and China are going to be as nice as Vietnam is, but I guess over the coming days, we're going to see what happens. 61% of you are relaxed. Okay, cool. If S&P goes down 2%, that relax is going to turn to nervous real quick. But it seems like the majority of you are relaxed. Tesla's giving up its after-hour gains, still green. Palantir's red after hours. Nvidia's red after hours. S&P very close to being red after hours. Newsmax is up 5% after hours, which is not what you want to see. Robinhood up a little bit after hours. Grab flat after hours. And then Baba basically flat after hours as well. He's live. He's live. Is he live? He's not live on the official White House stream. Let me check CNBC. Okay, we don't see him live yet. Let's get some analysis. I think he should be coming live pretty soon.
way for investors to think about navigating, at least near term, through this
Lizanne?
very uncertain?
We're going to wrap it up because we got President Trump walking out of the Oval Office right now. We're monitoring that as we await him coming to the Rose Garden to announce his tariff policy on what he has called Liberation Day.
All right, here we go, folks. We are starting.
Let's have a listen.
Thank you very much. Thank you. Nice crowd. What a good-looking group of people. Well, we have some very, very good news today, and a lot of good things are happening for our country. Please sit down. My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. Going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steelworkers, auto workers, farmers, and skilled craftsmen, we have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal, that means they do it to us and we do it to them. Very simple. Can't get any simpler than that. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper, and in so doing, use trillions and trillions of dollars to reduce our taxes and pay down our national debt, and it'll all happen very quickly. With today's action, we are finally going to be able to make America great again, greater than ever before. Jobs and factories will come roaring back into our country, and you see it happening already. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers. And ultimately, more production at home will mean stronger competition and lower prices for consumers. This will be indeed the golden age of America. It's coming back. We're going to come back very strongly. We're pleased to be joined on this momentous occasion by Vice President J.D. Vance. J.D., thank you. Thank you. Thank you very much. Where are you, J.D.? No, that wasn't too hard to find. I was looking, you know, he likes to take a low-key attitude, so usually we sit right in front. He's gaining a lot of confidence, Mike, isn't it? And nearly my entire cabinet is here, as well as Speaker Mike Johnson has done an amazing job. And with the great success we had last night in Florida, we have a majority of 7 And 7's like a lot when we had it at 1, right? You've done a fantastic job. And many of the members of the House and Senate are with us. Senators, congressmen, thank you all for being with us. We appreciate it. For decades, the United States slashed our trade barriers on other countries while those nations placed massive tariffs on our products and created outrageous non-monetary barriers to decimate our industries. And in many cases, the non-monetary barriers were worse than the monetary ones. They manipulated their currencies, subsidized their exports, stole our intellectual property, imposed exorbitant VAT taxes to disadvantage our products, adopted unfair rules and technical standards, and created filthy pollution havens. They were absolutely filthy, but they always came to us and they said, we're violating, we should pay for it. It's all detailed in a very big report by the U.S. Trade Representative on foreign trade barriers. And I'll just hold it up for you. It's available and you don't have to pay too much. As I understand it, you'll pay nothing. It's a lot of work for something, actually, because it's a special book. It's very, frankly, it's very upsetting when you read it, when you see what people have been doing to us for 30 years. This all happened with no response from the United States of America, none whatsoever. But those days are over. Let me offer just a few examples of the vicious attacks our workers have faced for so many years. The United States charges other countries only a 2.4 tariff on motorcycles. Meanwhile, Thailand and others are charging much higher prices, like 60%. India charges 70%. Vietnam charges 75%, and others are even higher than that. Likewise, until today, the United States has for decades charged a 2.5 tariff. Think of that, 2.5% on foreign-made automobiles. The European Union charges us more than 10% tariffs, and they have 20% VATs, much, much higher. India charges 70%, and perhaps worst of all are the non-monetary restrictions imposed by South Korea, Japan, and very many other nations. As a result of these colossal trade barriers, 81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed to go into other countries. And I say that friend and foe. And in many cases, the friend is worse than the foe in terms of trade. But such horrendous imbalances have devastated our industrial base and put our national security at risk. I don't blame these other countries at all for this calamity. I blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even believe. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles.
25% on autos.
Thank you. Brian, I'd like to have you come up here for a second, okay? I just see him sitting. He's been a fan of ours, and he understands this business a lot better than the economists, a lot better than anybody. Brian,
I don't know why the market's ripping right now, guys, but it's ripping. Something might have got leaked.
Thank you, Mr. President. I grew up just north of Detroit, Michigan, in Macomb County, known as the home of the Reagan Democrats. My first vote for president was for Ronald Reagan. I thought that was going to be the best president I ever saw in my lifetime until Donald J. Trump came along. I have watched my entire life, I have watched plant after plant after plant in Detroit and in the Metro Detroit area close. There are now plants sitting idle. There are now plants that are underutilized, and Donald Trump's policies are going to bring product back into those underutilized plants. There's going to be new investment. There's going to be new plants built. And the UAW members, and I brought 20 of them with me, they're sitting right over here. We support Donald Trump's policies on tariffs 100%. So, Mr. President, we can't thank you enough. And in 6 months or a year, we're going to begin to see the benefits. I can't wait to see what's happening 3 or 4 years down the road. Thank you, Mr. President.
Bitcoin just hit
What a great
89,000.
guy. He got it right from the beginning. He got it before almost
Tesla just hit
anybody else.
290. I don't know what's happening it, but we are green. We are very green.
You know, we won the state of Michigan. We won almost all of them, but we won Michigan by a lot. And I want to just thank you all. The auto workers were fantastic. The Teamsters were fantastic. Everyone was pretty good, I will tell you. Thank you very much. I appreciate it. You're going to be very happy very soon. And you probably see what's happening with all of the, not only car companies, but car companies in particular. See it with all of the ones they're moving, they're announcing day in, day out. You're seeing it. Nobody's ever seen anything like that. With today's actions, we're also standing up for our great farmers and ranchers who are brutalized by nations all over the world. It's brutalized. Canada, by the way, imposes a 250 to 300% tariff on many of our dairy products. They do the first can of milk. They do the first little carton of milk at a very low price, but after that it gets bad, and then it gets up to 275, 300%. So when they're figuring what's Canada charging, they say, oh, about 2%, 3%. But take a look at what happens down the road. When you look a little bit, it's not a pretty picture, and we don't like it, and it's not fair. It's not fair to our farmers. It's not fair to our country. And with countries like Canada, you know, we subsidize a lot of countries and keep them going and keep them in business. In the case of Mexico, it's $300 billion a year. In the case of Canada, it's close to $200 billion a year. And I say, why are we doing this? Why are we doing this? I mean, at what point do we say, you got to work for yourselves, and you got to, this is why we have the big deficits. This is why we have that amount of debt that's been placed on our heads over the last number of years. And we're really not taking it anymore. Through non-tariff barriers, the European Union bans imports of most American poultry. You understand? They say, we want to send you our cars, we want to send you everything, but we're not going to take anything that you have. Australia bans, and they're wonderful people and wonderful everything, but they ban American beef, yet we imported $3 billion of Australian beef from them just last year alone. They won't take any of our beef. They don't want it because they don't want it to affect their farmers. And you know what? I don't blame them, but we're doing the same thing right now, starting about midnight tonight, I would say. And China charges American rice farmers an overquota, it's called, a tariff rate of 65%. South Korea charges 50. Actually, they charge different, from 50% to 513%. And Japan, our friend, charges us 700%. But that's because they don't want us selling rice and other thing. Who can blame them, Madam Secretary? Agriculture, great job you did on eggs, by the way. The egg prices came down 50%. You got them down 50%. Once we got involved, they were going through the sky. The egg prices, they were going through the sky, and you did a fantastic job. Now we have lots of eggs, and they're much cheaper, down about 59% now, and they're going down further. We charge 2.8% for so many things that other countries are charging 200%, 300%, and 400% for. If imposing tariffs and protective barriers made nations poor, then every country on earth would be racing to eliminate these policies, and China would be the first on line. They run a very strong country, but they're not first in line, and the American people are paying a very big price. From 1789 to 1913, we were a tariff-backed nation, and the United States was proportionately the wealthiest it has ever been. So wealthy, in fact, that in the 1880s, they established a commission to decide what they were going to do with the vast sums of money they were collecting. We were collecting so much money so fast, we didn't know what to do with it. Isn't that a nice problem to have? What do you think, Marco? Good problem? Marco would love that problem. But we don't have that problem anymore, but we're not going to have it very much longer, I will tell you. But they collected so much money, they actually formed a commission to determine what they were going to do with the money, who they were going to give it to, and how much. Then in 1913, for reasons unknown to mankind, they established the income tax so that citizens, rather than foreign countries, would start paying the money necessary to run our government. Then in 1929, it all came to a very abrupt end with the Great Depression. And it would have never happened if they had stayed with the tariff policy. It would have been a much different story. They tried to bring back tariffs to save our country, but it was gone. It was gone. It was too late. Nothing could have been done. It took years and years to get out of that depression, far longer than even FDR had that office right over there for a long period of time. The ramp system, that's rather intricate, was built because of him. And every time you walk up, you think of him. And he did a great job in many ways, but it lasted long beyond his terms, as you know. But it's not too late any longer. And we're going to start being smart, and we're going to start being very wealthy again. We're going to be wealthy as a country because they've taken so much of our wealth away from us. We're not going to let that happen. We truly can be very wealthy. We can be so much wealthier than any country. It's not even believable, but we're getting smart. Nearly a century later, in the face of unrelenting economic warfare, the United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries. We used to do it. We can't do it anymore. We take care of countries all over the world. We pay for their military. We pay for everything they have to pay. And then when you want to cut back a little bit, they get upset that you're not taking care of them any longer. But we have to take care of our people, and we're going to take care of our people first. And I'm sorry to say that. And today we're standing up for the American worker, and we are finally putting America first. In sleepy Joe Biden's last year in office, the United States hemorrhaged 100,000 manufacturing jobs, and the number was going through the roof at levels never seen before. And our trade deficit reached a record $1.2 trillion, which is unheard of. Since the beginning of NAFTA, the worst trade deal ever made. It was a horror show. I was able to terminate it. They all said you'd never be able to get it out. We had to get approval from Congress to get it terminated. We had to live with that deal. It was the worst trade deal ever made by far. But since the very beginning of NAFTA, our country lost 90,000 factories. Think of what that is, 90,000. Think about putting a map up and putting text on it. You wouldn't have enough room. 90,000. I said, is that possible? We had it checked 4 different times, and it was actually somewhat higher than that. And 5 million manufacturing jobs were lost while racking up trade deficits of $19 trillion. That was the worst trade deal ever made. As a result of these gigantic losses, foreign nations now own $26 trillion more of American assets than think of this, than the Americans own of their own foreign assets or other foreign assets. The United States can no longer produce enough antibiotics to treat our sick. We have a tremendous problem. We have to go to foreign countries to treat our sick. If anything ever happened from a war standpoint, we wouldn't be able to do it. We import virtually all of our computers, phones, televisions, and electronics. We used to dominate the field, and now we import it all from different countries. A single shipyard in China now produces more ships every year than all of the American shipyards combined. Think of that. And it was a business that we used to dominate. We used to dominate it totally. In short, chronic trade deficits are no longer merely an economic problem. They're a national emergency that threatens our security and our very way of life. It's a very great threat to our country. And for these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. You're not so kind when you got ripped off with your salaries. My auto worker friends and my Teamster friends and all of the unions that typically voted Democrat, they're not voting Democrat anymore because worker, whether union or non-worker, they're for the Republicans now. That's what happened. But we will charge them approximately half of what they are and have been charging us. So The tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. I'd like to see the chart if you have it. Could you bring it up, Howard? This is our great Secretary of Commerce, Howard Lutnick. Thanks, Howard. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset?
So it's not a full reciprocal tariff. It's half of what they charge us. That's the reciprocal tariffs that he's putting out. And that's what he's announcing right now.
They will be, because we never charge anybody anything. But now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%. So we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually. They're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46% and much higher for certain items like cars, you know, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The prime minister just left, and he's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand. They're ripping us off, and they understood it. Prime Minister of Japan, Shinzo Abe. He was a fantastic man. He was unfortunately taken from us, assassination. But I went to him and I said, Shinzo, we have to do something. A trade is not fair. And he said, I know that. I know that. And he was a great gentleman. He was a fantastic man, but he understood immediately what I was talking about. I said, Shinzo, we have to do something. He said, I know that. And we worked out a deal, and it would have been a much better deal. But frankly, there were many years left on the deal that was made previous to my getting there. But it was something. If you look at Switzerland, 61% to 31%. Indonesia, Malaysia, Cambodia. Oh, look at Cambodia, 97%. We're going to bring it down to 49. They made a fortune with the United States of America. United Kingdom, 10%, and we'll go 10%. So we'll do the same thing. South Africa, 60%, 30%, and they've got some bad things going on in South Africa. You know, we're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking not the full, we could take the full 88%. Thanks a lot, Harold. He's doing a very good job. How's he doing, all right? I think you better take it with you. It's not going to last very long. He's going to put it, it's going to follow you down with the wind. I brought a hat just in case it got too windy, but here, would anybody like a hat? I'm not giving it to a cabinet. I'm giving it to the auto workers. Come here. Thank you, fellas. Get it. That's it. That's it. They deserve it more than our cabinet. Our cabinet has plenty of hats. But you see the numbers. The numbers are so disproportionate. They're so
The S&P 500 is down 2% after hours. That's not supposed to happen after hours. I don't think anyone expected reciprocal tariffs, but half of their value. Like, none of the media outlets reported that this would happen. But it's Trump, and you never know what you're going to get. And apparently we got reciprocal tariffs universally on imports, but half of what the other countries charge us.
Unfair. At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart? And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate because the money is so enormous that you're talking about. There's never been probably anything like it in terms of the enormity. And there are a lot of bad things happen at the people that do the check-in, and they're looking at 10-year jail sentences if they do play. We're going to treat them so good, but if they cheat, the repercussions are going to be extremely strong. Foreign nations will finally be asked to pay for the privilege of access to our market, the biggest market in the world. We're right now the biggest market in the world. We had a great country 4 years ago in terms of the economics. We were doubling up on China. We were doing so well. Nobody was going to catch us, but so much of it slipped away over the last 4 years under Biden. I campaigned on this policy throughout last year, and today that promise was made, and it was also a promise, as you know, that was kept. Promises made, promises kept. To any company that objects to our common sense reciprocal tariffs, again, reciprocal, back and forth, back and forth. And I call this kind reciprocal. This is not full reciprocal. This is kind reciprocal. But what we do is we cut it in half. We charge them. My answer is very simple. If they complain, if you want your tariff rate to be zero, then you build your product right here in America, because there is no tariff if you build your plant, your product in America. And we've seen companies coming in like we've never seen before. Likewise to all of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs. I say, terminate your own tariffs, drop your barriers, don't manipulate your currencies. They manipulate their currencies like nobody can even believe, which is a bad, bad thing and very devastating to us. And start buying tens of billions of dollars of American goods. Tariffs give our country protection against those that would do us economic harm. And many people were looking to do us economic harm. Maybe not so obviously, but they were doing tremendous economic harm. But even more importantly, they will give us growth. These tariffs are going to give us growth like you haven't seen before. And it'll be something very special to watch. I am so looking forward. And Brian, it's going to happen even faster than you said. You know, you might say, but it's already started. It's already started. Work's already begun on plants all around the country. And you see that as before. These are big, rich companies. We have $61 billion started on a big plant going up. It's going to be announced over the next 2 days, and they already started work. Many of these the biggest companies in the world, they've committed to build. We're going to build, sir. And they came here to see me, and they wanted to know if they could have a press conference. I do as many as I can. I'm pretty busy trying to stop Russia and Ukraine and the Middle East. We got to stop that. We got to stop the Houthis, which we're making tremendous. They like shooting ships down and out of the water, sinking ships. They get a kick out of it, but they're not getting such a kick out of it now, are they, Mr. Secretary? They're not getting such a kick out of that now. But here are just a short list of some of the companies that have already announced and committed to investment. And this is a company that built its factories and its plants in China. Apple is going to spend $500 billion. They never spent money like that here. They're going to build their plants here. SoftBank, OpenAI, and Oracle, great companies, are investing $500 billion almost immediately. NVIDIA, a hot company, is investing hundreds of billions of dollars. They just announced. TSMC, the biggest, most important company in the world of chips from Taiwan, with no investment from us, is investing $200 billion. And they said the reason was, number one, the election of November 5th, and number two, the tariffs. They don't want to pay the tariffs, and the way they're not paying it is to build their plant here. So we're going to go from almost no percentage. We used to have 100% of the chip market. Now it's all in Taiwan. Almost all of it's in Taiwan, a couple of other countries, but mostly in Taiwan. And think of it, we had 100%. We lost it because of people in that office that didn't do their job. They allowed it to be stolen from us. Johnson & Johnson, great company, $55 billion. Eli Lilly, $27 billion. Meta is investing $500 billion. Wow. DeMac is investing $20 billion. CMA, CGM, $20 billion. And then you have Merck and Clarios, Stellantis, General Motors, GE Aerospace, Honda, Nissan, Hyundai.
Guys, the S&P really doesn't like this. Either of these are algos, but down 2.5% after hours. Are you kidding me? Apple down 4%, Tesla down 4%, Robinhood down 5%, NVIDIA. I mean, I know a lot of these are high beta, but they're following the S&P. And for the S&P to be down this much after hours where there's not that much volume, it's telling that the market is not happy with this for some reason.
They're all putting in billions and billions of dollars, and they're committed 100%. So. And we've never had, and this is after 2.5 months. This is after just a short, this all took place as soon as we came out with what everybody wanted to do. You know, I watched a gentleman today on television. He used to work with Lee Iacocca, a very respected automobile person. And he said, you know, because they're asking people, they try and get as many negative people as they can, but they can't find them too much. It's pretty hard to find in terms of what we're doing, especially when they see all this investment. They said, so tell me, what do you think of what Trump is doing from the automobile standpoint? He said, I can't believe it. Somebody is finally, he's an older guy, real pro, really top guy with Lee Iacocca. He said, I never thought I'd see the day when this would happen, where somebody had the courage to go and do what has to be done. This is transforming our nation. Our entire nation is going to be transformed, not only with the cars, but on every single other item that's built. We're going to become an industrial powerhouse. And he said that so beautifully today. In fact, I'm going to find out, I'm going to get a tape. And Bruce, I'm going to get that tape and I'm going to send it to you out in Long Island, and you're going to play it for the people and all your union workers and your non-union workers out there. You got a pretty even split. But we have, so far, it looks like we're going to have about $6 trillion of investments. And you wouldn't do that in years in this country over the last number of years. $6 trillion, and that's going to be much higher by the end of the year. And think of what $6 trillion is. You wouldn't have even a small percentage of that under this other system. We're going to be an entirely different country, and it's going to be fantastic for the workers. It's going to be fantastic for everyone. There will never have been a transformation of a country like the transformation that's already happening in the United States of America. It's an incredible thing to watch, and it's incredible to meet with the top people that you read about, very wealthy people, or people that are great managers and executives and presidents of big public companies, and to watch the enthusiasm they have now that they didn't have. They gave up on our country. They went to foreign countries and they built. Companies are pouring into our country at levels never seen before, with jobs and money to follow, and it's really beautiful. In the coming days, there will be complaints from the globalists and the outsourcers and special interests And the fake news will always complain. But never forget, every prediction our opponents made about trade for the last 30 years has been proven totally wrong. They were wrong about NAFTA. They were wrong about China. They were wrong about the Trans-Pacific Partnership, which would have been a disaster if I didn't terminate it. If I didn't terminate that, United Auto Workers, you would have had no jobs in this country. You would have had no jobs. It was all going to other countries. In my first term, they said tariffs would crash the economy. Instead, we built the greatest economy in the history of the world. And again, I have great respect for President Xi of China, great respect for China, but they were taking tremendous advantage of us, and I commend them for that. I say, hey, if you can get away with it, that's okay. But you know, they understand exactly what's happening, and they probably, most of them are saying it's about time they did something. But and they're going to fight, and they're going to fight fair. Everyone's going to fight. You know, it's like I say to the leaders, look, you got to take care of your country, but we have to start taking care of our country now. We can't do what we've been doing for the last 50 years. From the day of my election, the stock market went up in my first term 88%, with NASDAQ going up 155%, more than any president has ever had in any term in office, by far. And I think we're going to blow that away. And maybe the numbers won't show, but I think they're going to show much better than even those numbers. But what you're going to see is you're going to see activity, that empty, dead sites, factories that are falling down. Those factories will be knocked down, and they're going to have brand new factories built in their place. They're not only talking about renovating, they're talking about brand new, the best anywhere in the world, the biggest anywhere in the world. I have a friend who builds car plants, and I said, I want to see the biggest and the best. He said, well, we have to go to Mexico. I said, no, I want to see it in the United States. He said, we're not building them in there. This is a year and a half ago during the campaign. He said, we're not building it. You'd have to go to Mexico. When I was starting to decide to run, and I went to #1 in the polls very rapidly, I want to say, like, let's say in the first hour. And then shortly thereafter, it looked like I was going to win, and the fake news was saying, oh, no, don't do this. What they don't know is if I didn't win, they would have really been in trouble, because nobody wants to read them anyway. But I tell you what, when it looked like I was going to win, I announced that I was going to be doing exactly what we're talking about today. Great consistency, actually, because I've been talking about it for 40 years. But because I saw what was happening 40 years ago. If you look at my old speeches when I was young, very handsome, my old speeches, and that people would say, I'd be on a television show, I'd be talking about how we were being ripped off by these countries. I mean, nothing changes very much. The only thing that changed were the countries, but nothing really changes. But it's why it's such an honor. It's such an honor to be finally able to do this. If you look at China, I took in hundreds of billions of dollars in my term, hundreds of billions. They never paid 10 cents to any other president, and yet they paid hundreds of billions, so much so that Biden couldn't do anything. They wanted to try and terminate it because he had a very special relationship with China. You know what the relationship was? He had a special relationship. But the numbers were so big, that they couldn't do it. So they did ease it up. They did things that they shouldn't have done. They made it a lot more comfortable for them, but they couldn't do it because the numbers were hundreds of billions of dollars, and I did that. And we were on our way to doing something like incredible. And then we had a very bad election happen, a very bad election. A lot of bad things happened. So when I said we got to do it again, I said we have to make it too big to rig. And we made it too big to rig, and we won in records. And it was a monumental win. And it was such an honor to see so many of you, like Brian and your friends, here with us to celebrate, and to more importantly celebrate what we're doing, because that wouldn't be a full celebration if we didn't do this, because this will be an entirely different country in a short period of time. It'll be something the whole world will be talking about it. The critics made the very tired predictions earlier this year, but in February, core inflation dropped to the lowest rate in 4 years. And the price of eggs, as you know, just in a month and a half, we were there for 4 weeks. And the first week I got blamed for eggs. I said, I just got here. They said eggs have gone up at like 250% and you can't get eggs. And they were going crazy. And I said, I just got here. And then we got to work on eggs and we got to work on everything. And our great Secretary of Agriculture, you did a fantastic job. Brooke Rollins, she did a fantastic job. And as I said before, the price of eggs dropped now 59%, and they're going down more, and the availability is fantastic. They were saying that for Easter, please don't use eggs. Could you use plastic eggs? I said, we don't want to do that. We want to, and you really came through. It's an amazing job. Thank you very much, Brooke. You did great. But likewise, an old-fashioned term that we use, groceries. I used it in the campaign. It's such an old-fashioned term, but a beautiful term, groceries. It sort of says a bag with different things in it. Groceries went through the roof, and I campaigned on that. I talked about the word groceries for a lot, and energy costs now are down. Groceries are down. Gasoline is way under $3, and people are beginning to be able to buy things and live again. We brought prices way down. We created 10,000 already in a few weeks, new manufacturing jobs. And it was that took place in 1 month, numbers that they haven't seen in a long time. We had virtually no inflation under my term. We had virtually no inflation for 4 years. But after transitioning over to Sleepy Joe, it went from almost non-existent to the highest in the history of our country. They're the highest inflation in the history of our country, brought up by energy and bad spending and bad policy, and a lot of bad things happened. How about allowing millions and millions and millions of people to pour into our country with open borders, where it's so sad to see even now. And I see our great secretary of you have done. Stand up, please, Christy. Stand up. Christy Noem and Tom Homan. These people are doing a great job, but gotten them out in records. We have problems with judges that don't want them to go out. They want Tren de Aragua, and they want MS-13, the most vicious gangs ever. Nobody's ever seen anything like it. Absolute killer gangs. They kill people. They don't even think about it. And we put them out, and we have judges now, radical left judges that they don't want them to go out. They want them to even be brought back. Let's bring them back. You've done a fantastic job, and please thank everybody. Homeland Security, thank everybody. Appreciate it. And we now have a border that's the best border that we've ever had, even better than it was my first term. My first term, we did good, but this one we really specialized in. We've done really well. And we had records then. We had the best, safest border. 4 years ago, we had the best border there ever was. And now we have, you've actually matched it and done even better. And we're going to get it down the right way. And we want people, by the way, to come into our country, but we want to come in through a legal process. We want them to come in legally. We need more people. We need people to run these plants and to help the auto workers and the Teamsters and the non-union people and everybody else. But we need people and the farmers. And we're going to let people come in, but they want to come in. We want them to come in legally. They have to have the capability of loving our country, not people that hate our country. We don't want them in our country. And now we're going to pass the largest tax cuts in American history, and that's where we're relying on Mike and John Thune. And we will not cut Social Security, Medicare, or Medicaid benefits, and the Democrats will, because if they got in, the entire economy would collapse. This country is heading for a collapse under the people that you saw. They were horrible. I think one of the reasons people like the job, I have my highest approval ratings because I think they're comparing me to the worst administration in the history of our country. So I appreciate that at least. But Speaker of the House, Mike Johnson, and Senate Majority Leader, appreciate it, Mike. John Thune have been fantastic, by the way. But they've been working tirelessly on taking the next step to pass the plan for our one big, beautiful bill. I'd like to name it that if you can. One big, I made that statement about 6 months ago, and everybody calls it one big, beautiful bill. And it will be that. It'll have everything, the big tax cuts and every incentive there is. And it'll be fantastic. And by the way, for the cars, we're asking for an interest deduction on a loan. So if you build the car only in America, we do it, Brian. If the car's not built in America, you don't get the interest rate deduction. But if you build the car in America, if you buy a car, if it's built in America, then you get an interest rate deduction, tax deduction, and that's a big thing. That's going to be a big thing. I think that's going to pay for itself very quickly. That deduction never happened. We've never had anything like that before. Somebody said, where do you get the idea? Because it's so basic. You would think that would have happened a long time ago. It never did, and I'm very happy it didn't, because now I can say that was my idea. But we're going to get us closer to the debt extension. We have to get the debt extension passed, and I know you're going to be able to do that, Mike, and it's very important that you do that. And all of the other things that the Senate budget plan gives us, along with working, because I know they're working together, John and Mike, and the two bills are going very well together. We need to get our shared priorities done, including certain permanent tax cuts. We want the tax cuts to be permanent, spending cuts, energy and historic investments in defense, border, and so much more. We're covering everything. These will be phenomenal. There'll be no bill like this going to straighten. One bill is going to straighten out our country for many, many years to come. And we said, let's just do it and let's get it done. And some guys will love it and some guys will like it a little bit less because they're not getting what they were exactly looking for, but they're getting a lot. They'll never, if we get this done, it'll be the most incredible bill ever passed in the history of our Congress and Senate and congressmen, the senators and the congressmen, many of whom are here today, will be very proud of themselves. I really believe that it's going to set us on a whole new prosperous path. We're going to cut spending and right-size the budget back to where it should be. We're going to do that very strongly. Thank you, Rick. Thank you, John. Thank you. Oh, look at all of our senators over there. Oh, boy, that's a nice group of people. But I won't like them so much if they don't get this bill done. That's a great group. And Congressman, thank you very much. I appreciate it. Tremendous people. The Senate plan has my complete and total support. And the House plan likewise is very similar. They're moving along pretty much at the same clip. And as soon as you're ready, you'll show it to me. And I'm sure it'll have my support, Mike. Every Republican congressman and senator must unify. We have to unify. We can't be separated. We have to get it done. We have to get absolutely everything we can, and we have to take care of the American people. That's the only thing that matters. We have to take care of the American people first. We need to pass this bill immediately, get it done, including debt extension. From this day on, we're not going to let anyone tell us that American workers and families cannot have the future that they deserve. We're going to produce the cars and ships, chips, airplanes, minerals, and medicines that we need right here in America. The pharmaceutical companies are going to become roaring back. They're coming roaring back. They're all coming back to our country because if they don't, they got a big tax to pay. And if they do, I'll be very happy, and you're going to be very happy, and you're going to be very safe. We're going to build our future with American hands, with American heart, American steel, and we're going to build it with American pride like we used to. We're approaching our 100th day as president and have been given credit by a lot of people, actually, even some of the fake news. Can you believe it? Which in this case, hopefully isn't fake, for having done more in that time than any other administration in the history of our country in the first 100 days. I think we've had an amazing, in terms of what we've done, what we've gotten accomplished. I'd like to see if we can get that war ended and another war from not starting in the Middle East. We have to get Russia. They're losing 2,000 on average, 2,500 people a day, young people, soldiers, Russian. Think of that, 2,500 through some days, but on average, probably over about a 1 week period, it's 2,712, they say. They're losing those soldiers. They're dying. They're being decimated. And they're not from our country, but they're from other countries. But they're human beings. They're from Russia. They're from Ukraine in this period, most of them. And we're going to get it stopped. It's a senseless war that would have never happened if I was president, and it shouldn't be allowed to go on. And I think we're being given good cooperation by Russia and by Ukraine, but we have to get it stopped. It's humanity. It's humanity. It's a terrible thing. This will be a very big moment. I think you're going to remember today. It's going to be a free nation that we're dealing with. We're going to have a very free and beautiful nation. It's going to be Liberation Day in America, and it's going to be a day that hopefully you're going to look back in years to come and you're going to say, you know, he was right. This has turned out to be one of the most important days in the history of our country. God bless you and God bless America. Thank you, everybody. Thank you very much. Thank you. Thank you very much.
Okay. Well, that was the historic Liberation Day, April 2nd announcement. I'll be switching over to Tom Lee whenever that's ready to get set up. Should be happening in about 3 minutes. It might be a little bit late. So when he's live, it'll be through X Spaces. I'll be streaming it live on YouTube as well. Lot to dissect and lot to discuss. I think the biggest announcement here is not the auto imports of 25%, not the 10% minimum across the board, but rather the reciprocal tariffs that are discounted half to what the other country charges us. So there is the list right there. So China charges us 67, we charge them 34. The EU charges us 39, we're going to charge them 20. And then it goes on and on. Taiwan charges us 64, we do 32. Vietnam 90, we do 46. This is, this is one of the things that I think we've been talking about for the past couple of days on the show, which is that we have no idea how this is going to play out because Trump is Trump and you always get some type of curveball. I think the market had priced in a lot of what they thought was going to happen, but they didn't expect this. They didn't expect this reciprocal half version of tariffs against what other countries are charging us. I quite frankly think it's actually kind of good. Like, wouldn't it be worse if China's giving us 64 and we give them back 64? Isn't it better if we do 32? And quite frankly, don't we have some more negotiation room to get to their 64 because we're starting at 32? So I'm kind of confused why the market's upset at this. Like, they can be upset about tariffs, sure, but if they're upset uniquely at the half discount we're giving, well, that just feels really weird. I mean, S&P down 2.25%. Really? Really? Now, I think what's really kind of weird here is that we had a plus 2% after hours. As you can see right there, we hit 570. We were about 0.5% away from capturing the 200-day moving average after being at 546 on Monday. So that was a hell of a swing after hours. And then it went right back down 2%, not to where we were on the market close, but now even below where we ended from that 4 p.m. close, 564 down to 551. About a 17-point swing, which is, again, I just don't think I don't think a lot of people expected that. Definitely felt like obviously was a bit of a bull trap as soon as it opened. As soon as we pumped up and Robinhood was up 5%, Tesla was almost at 300. Now, is this a bit of a bear trap? I mean, maybe, right? Like, do we deserve to be down this much off this type of policy? 60% of you say yes in the chat. You believe it's a bear trap after hours. I don't know if it is or if it isn't, but it definitely feels more aggressive to the downside when we were just that green. Maybe algos were playing a game. They said, hey, let's hype everything up and let's dump it immediately. But that is very weird. I mean, Apple, dude, is down 5%. When's the last time Apple had a 5% day to the downside? I think maybe a couple months ago. And after that, maybe like a few weeks or a few months back in early 2024 where we saw this type of 5% down day. You don't see 5% down on Apple. Apple is the world's most valuable company. That is weird seeing that. Robinhood's down 5%, Tesla down 3.7%, Nvidia down 3.3%, Nvidia right back down to those low 100s, 106 right now. It got to 105 at one point. Google's down 3%, Uber's down 3%, China's down 2%, the NASDAQ down 3%, Grab down 3%, Reddit's down 4%, Meta's down 3%, Rocket Lab down 5%. I mean, that just feels a little aggressive for something that was announced, which A, the market knew about, and B, the part they didn't know about is half of what theoretically we imposed, or what other countries impose against us. So this is weird. This is a bit weird here. The China tariff, you guys are saying that might be, I mean, like maybe, but again, kind of felt like the market already knew there was going to be that China tariff. Canada and Mexico weren't mentioned either. I don't think they're on the list, right? Canada and Mexico are not on. No, they're not on this list. Hold on. Is there on the no? Canada and Mexico are not on this list. This is from the official White House. They just posted this 5 minutes ago. You've got a lot of countries: Egypt, Serbia, Guatemala, Ecuador, Argentina. You have no Canada, no Mexico. Trump didn't mention Canada or Mexico either. I don't remember him mentioning them. You've got China and the EU at the top. Then you got Japan, India, South Korea, Thailand, but no Canada or Mexico on this list either as well. You guys are saying 25%? Okay, well, that makes more sense because it's 25% on them, not reciprocal against them. Okay, that actually makes a lot of sense. Now, again, Mexico did say we're not going to go tit for tat, so we'll see what Mexico says tomorrow. Canada says they're willing to fight, but they're not willing to be as aggressive as they said a couple weeks ago because they're more worried about job loss. So I guess tomorrow we'll get more updates from what these countries are planning to do. Okay, what do you guys think? What do you guys think? We should have Tom Lee on in a bit. He's not here yet. I will switch to it as soon as we go live with him. But this is interesting. Yes, the highest was Vietnam, but Vietnam today said that they're going to get rid of some of their tariffs. Vietnam, I didn't even know they charge us 90. Actually, Cambodia does 97%, so we're going to do 49%. Granted, we might not do that much trade with Vietnam and Cambodia, so those don't matter as much as like China and the EU. But we're definitely going back and forth now at this point. Amit, I think this is kind of good. We need to stop listening to him. Yeah, I mean, in the context of Trump, right? Like, do you believe him or not here? Here's the thing. As soon as he pulled up this picture with the reciprocal tariffs, again, I did not expect this at all. It already felt a little weird, right? Like, as soon as you see this picture with all these reciprocal half tariffs, it just felt like this was kind of a plan they came up with in the past couple of hours, to be honest. Like, did they I feel like it would have leaked if a couple of weeks ago they were like, let's do half of what they're charging us. It kind of feels like at 9 a.m. this morning, they were like, you know what? Here's how we're going to soften the blow, which obviously the market is not being soft about. We're going to do half of what they charge us. I mean, that's weird, right? It's just so, like, did anyone expect that? I did not expect that at all. That was weird. Very weird. But granted, I don't think the S&P deserves to be down 2%. On that. Like, that's very weird. Tesla right here down 4%, 271, recovering a little bit from 268. S&P still down 2.5%. Nvidia down 3.4. Palantir down 5.2. Red Cat down 4 after being up 17. Robinhood right here down about 6%. At one point it was below 40 after hours as well. Nothing is really up after hours. I don't see anything being up. I mean, Pepsi's up, Coca-Cola's up, silver's up, gold is probably short. QQQ is up. Is gold up? Yeah, gold's up 0.5% after hours. I mean, Trump also made a comment on the stock market. SoFi is down 5% as well. Trump did say that in my first term, the stock market went up 88%, and I believe my second term will have even better numbers, even if the numbers don't show, which is kind of weird because, you know, if the stock market goes up, the numbers would show it. But it was kind of, again, a sort of nonchalant answer from Trump around the stock market where he was just like, yeah, you know, we did good in Trump 1.0 and in Trump 2.0, it's going to be great. It just takes time to see how it plays out. But he's not super passionate right here about the stock market. He's much more passionate about, obviously, tariffs. Yeah, Tom Lee is still not live yet. It's probably going to take a couple minutes. He's probably getting ready in the background, but not here yet. As soon as he's live, then we'll switch to him. Should not affect Tesla much. Not sure how it impacts Palantir. Definitely will hit NVIDIA. Yeah, this is definitely going to hit NVIDIA. Palantir is held up a little bit more because they sell pure software, not hardware. Tesla makes a lot of their cars in the United States, so that should help them out as well. But this is a bit weird. Oh, we have Trump actually signing this stuff. Hold on. We didn't even see that. All right. Trump's right here signing these as well.
The list here, fentanyl tariffs on Canada and Mexico staying in place with the exception of USMCA compliant goods, and all of this going into effect at midnight tonight.
And the market reaction after hours, I've never seen anything like it. This, I think fair to say, is worse than the worst case scenario of the tariffs that many in the market expected the president to impose. You laid out a number of the percentages there. And there's some question of how the administration calculated the percentages that they're responding to in each of these cases. Are they adding in value-added taxes? He talked about, non-tariff barriers as well. So I think while many were hoping that this would eliminate uncertainty, there's going to be more uncertainty in the market. And from those watching policy tomorrow on, well, if countries push back on how these non-tariff barriers were calculated, will there be wiggle room here? Exactly when do these go into effect? How quickly are companies going to have to adjust their pricing? So many questions.
All right. I've got a little bit of bad news. I am sorry about this, folks, but with people like Tom Lee, this stuff happens. He has canceled. Text message from his assistant. We're going to have to reschedule for next week. Tom feels terrible, but we have to, for a compliance reason, cancel this for today. Some of this stuff you can't control. I'm sorry. So if you're here for Tom Lee, you are free to leave. I'll probably call Steve instead. That's my personal Tom Lee, and we'll get him on the phone. But they said we will reschedule for tomorrow. He has to cancel right now. It is what it is. Sometimes with these people, I mean, this is how busy their schedules are. Yeah, so they're canceling right now. I mean, part of the reason could be because Tom honestly wants more time to digest what just happened with Trump and tariffs, but they're saying it's a compliance thing. I don't know what that means. That's press communications talk for, hey, we can't do it today, but they said we'll do it next week. Sorry. I'm sorry. This I promised there was an interview scheduled, but it was with me and Evan, Stock Market News, another account on Twitter. They are saying that we will be doing it next week. All right, so we'll get it next week. Let's call Steve. For those of you that don't know him, he is my personal Tom Lee. He tried calling 10 minutes ago, so let's see if he'll pick up. And let's see what his reaction is to these tariffs. Steve.
Oh, man.
So Tom Lee just canceled on me.
He was coming on the show?
Yeah, he was coming on at 5 p.m. with me and Evan, Stock Market News, via Spaces.
Nice.
But yeah, he canceled. So I told everyone I have my own personal Tom Lee, which is Stephen Fiorillo. And so I'm happy to have you on the show today.
Well, I got a rant for you if you want.
Well, I want to get your reaction to everything we just heard before we get into the rant, because a lot of people.
I didn't hear anything, so I have no idea what you're talking
see,
about.
I told you guys in the chat, Steve's not going to care about these tariffs. But Steve, the S&P is down 2.5% after hours.
Don't care.
Okay, I know you say you don't care, but that's a little aggressive, don't you think? Like,
no, because I don't care.
Apple's down 5%. Like, you still don't care?
No.
I think this is a bit aggressive for a tariff
it's
announcement.
After hours. Who cares about after hours?
No, I
Seriously.
get it. I just
after hours. It's 100,000 shares. Who cares?
I get it. It's a little aggressive in my opinion. But okay, so because you didn't hear about the announcements, let me tell you the announcements right now. 25% tariffs on foreign-made autos. Okay. Second, and this part caught me off guard. I don't know if it'll catch you off guard, but we are imposing universal reciprocal tariffs, but they're only going to be half of what the country charges us. So for example, now Steve just see, freaking everyone's canceling on me today. Let me call him back. I think his phone died, bro. It went straight to voicemail. Literally, dude, everyone's canceling on me today. He got into a meeting, either someone else called him or his phone just died. But what I was gonna tell him is, yeah, everyone's about Farzad. I need you to join the channel or something right now, dude. Like, I need someone to help give me some analysis here. But I was gonna tell him is that universal reciprocal tariffs are half of what the countries are charging us. Steve's not gonna care about it, obviously, but still, that is what they announced today. All right, he's calling back. Did your phone die?
No, why'd you hang up on me?
I didn't hang up on you. That was you. But
of course you did. You purposely hit end when you were about to tell me what the tariffs were.
Okay. Anyway, the point is, so South Africa charges us 60%. So Trump says we're charging them 30%.
Why not 60%?
Well, that's a good question. I don't have the answer to that. Trump's response was it is a quote unquote discounted kind reciprocal tariff. China charges us 67. We're charging them 34. The EU 39. We charge 20. Does this make sense to you at all?
I'd be charging him full freight.
Okay, so how do you interpret the logic behind charging them half?
No, he basically thought it would be less of a shock to the market and still accomplish the same goal.
Well, okay, so agreed. But this is weird, dude. There were 0 media outlets that reported this could possibly happen. I don't think anyone expected it. It seems like, this is my gut feeling, it seems like they came up with this today.
I mean, look, people said it may not be exactly what he's saying. Who knows what to expect? I mean, I don't think anybody knew what to expect. And I think that this was a very likely outcome that he was going to do a discounted rate tariff. I mean, once again, you're talking to somebody who could care less about this. Because at the end of the day, I think that people are just looking at the tariffs and worrying that products are going to go up in price. People are not looking at this from all angles. And if we get a major tax cut, especially if they ram through with the votes, $150,000 no tax federal income, then you're in a position where even if prices go up a little bit, people are going to have way more money and the economy is still going to grow and people are going to still have more purchasing power than they did. So I don't really care what happens in the next week or so.
Do you also think it's a negotiation tactic that they start at half and they go higher from there?
Yeah, don't be surprised if next week it changes. Don't be surprised if the market goes down. I'm not saying it's going to. But if the market goes down 10 or 15% from here, don't be surprised if Trump says, I had a great phone call. Guess what? Tariffs 20%, not 34% to China.
Yeah.
It's a needle. This isn't an all or nothing. This is a knob that's going to get turned until he fine tunes it however is best for the outcome he wants. And once again, don't be surprised if this is a shockwave that's done intentionally, because we've seen bond prices drop or the yields on bonds drop without the Fed cutting rates. If this gets rates to go down even further, watch them refinance the debt, and then right after they refinance the debt, go back on their tariffs and cut the tariffs by another 50%.
Well, the 10-year is down right now, which is the only good thing here.
Oh, really?
Yeah.
Go figure. Go figure.
For those in the chat saying that these numbers by the White House about tariffs charged to the U.S. are wrong, they might be. I'm just going with what the official picture is that they posted today. So if the European Union is not doing 39%, honestly, I don't know. I'm just literally going with what the White House posted.
It could be an aggregate. Who knows?
Well, so the White House is including currency manipulation and trade barriers in their percentages.
Oh, that's okay.
I mean, that's like when I was ordering a Tesla on their website, and they're like, "Do you want to include your savings from not having to buy gas?" Which is not really, making the price.
I don't know how you can really put that in because FX headwinds change daily, so I think that's a moving target. But sure, okay.
No, you're right. FX headwinds change. I didn't think of that. That is 1,000% correct. These numbers theoretically should change by the second.
Yeah, I mean, my neighbor trades currencies at night. Like, that's what he does. Like, all this stuff changes all the time.
Yeah, so these numbers, I can understand why you guys are upset at these numbers, but this is what the White House put out. Which also, Steve, this also makes me feel like this is kind of BS. Like, really, they came up with these numbers and then said half. Like, it feels like it came up. Literally, it feels like they came up with this in the past couple of hours. That's what it feels like.
Don't be surprised if this is just a tactic to get bond rate on. I gotta say, stop saying prices on interest rates to come down just so they can refinance the debt and then fine tune everything again. I would not be surprised.
No, I wouldn't be surprised either. Robinhood's down 8%. Tesla's down 5.7%, right back to 266. Nvidia down 6%, 104, baby, on Nvidia. Google's down 3%. Uber's down 5%. Steve, what is your reaction to tech selling off right here, including Nvidia?
I mean, I can't be more clear, except I don't care.
Did you buy more?
It doesn't. It wouldn't. So here's the thing. The only thing that changes for me with Nvidia at 140 versus 106 is me selling cover calls on the position. Otherwise, I have no interest in exiting the position, so I really don't care where it's at right now. I still want to buy more.
Yeah, no, I agree with that. My question is more deeper around why do you think the market sentiment is this bad still on
Because
stuff?
everybody is looking at this from an emotional perspective rather than a long-term investment perspective. You have $7 trillion or $7.2 trillion sitting in money markets. At some point, the market's going to get discounted enough where that money flows back into equities. Maybe we're not there yet,
Yeah.
but does this really change anything for NVIDIA's earnings? That's substantial. Does this change anything for any of these companies?
Well, I mean,
No.
no, but the tariffs on Taiwan, yeah, that might, right?
Oh, really? They're all making fabs in the U.S. It's not going to matter.
I don't know if that gets NVIDIA out of the potential margin compression because a lot of their, I mean, all their chips still come from Taiwan.
Got news for everybody. They have a 56% profit margin. They can afford to give up 3%. It's not going to matter.
Look, I agree. They have a margin of safety. I'm just saying, you know, that could have still affected NVIDIA. 100%.
Yeah, in the short term, it absolutely could, but I'm not a short-term investor.
Yeah.
This is a great buying opportunity. I just wish that this happened 2 days ago, not today, because my 401k money already went in 2 days ago. Can never time it. You know, that's the problem with having these automatic things. Never gets timed at the right moment.
Yeah, I mean, obviously, even I bought yesterday at like 108, 107. Like, obviously, you can never time it, but it does feel.
I bought Monday. I mean, I personally bought more NVIDIA on Monday. I got a 104.5 or something like that.
It does feel very bear trappy after hours. Like, it does not feel like Apple deserves to be down 5%.
But it's bears. Who cares?
Apple's down 6% after hours now.
You tell me that if Apple goes down to 180, people aren't going to freaking just open up the floodgates and buy? You're telling me if Meta goes to 550 or if Amazon goes to 175, people aren't going to be buying? Of course they are.
No, 100%. Of course, I think no. You are right. If we see like stupid prices, people will buy. There will just be two questions: A, are those stupid prices reflective of earnings that meaningfully are declining? We won't know until Q1 happens. B, you know, the existential question that all of us are asking is like, are we actually going to get those prices? Like, yeah, of course, people are going to buy, but do we get those?
How about this? Q1 earnings start in 2 weeks. Okay. How about we wait and we see what these companies do and if they guide down substantially on earnings? Because to me, we shouldn't be selling off right now. This is all hearsay. We need to hear from the companies themselves. We hear in 2 weeks, and this earnings season is going to tell whether this year's numbers are real or not. Or if I should rephrase that, if they are going to maintain or not. Because if they will maintain their profitability projections, who cares about whatever the narrative is with tariffs? Who cares?
Well, okay, so let me ask you a question. Do you think we're going to get a Q1 guidance going? Do you think Meta looks at these tariffs and they're like, hey, we need to guide down for uncertainties?
No, Meta's not guiding.
But how do you say that so confidently? Like, I don't think you can just assume none of these big tech companies are going to.
Well, because you asked me about a company that I don't think is going to guide down. If you ask me about Amazon or Tesla, I think Tesla could guide down. I think Amazon may discuss, you know, headwinds with products that are being manufactured overseas, which could impact sales. I mean, but Meta, no, why would Meta's a software company. This isn't going to impact them.
No, I agree. However, if there are more uncertainties, S&P 500 down 2.4%, every company has to factor that into their guide. Like,
people are not going to stop advertising on social media.
Steve, I disagree with you on if people aren't buying as many products because the price of those products go up, advertisers will not be spending as much money. We have this debate every time. It's like, it's not that hard to understand. You're going to see a decrease of advertising on the social media platforms if people are not spending money.
We'll see.
If the tariffs increase the cost of goods, then people are not, theoretically, people are going to pull back on some of their spending.
First, you got to see how much they go up by.
Well, yeah. I mean, and I guess that's for China now, it's 34%. It's like,
who cares?
I know you're saying who cares, but the market right now definitely cares. Okay, what's your rant? So you wanted to call me yesterday about this, but you didn't. You didn't get to
Yeah, I didn't realize I had a board meeting last night.
Okay, so what's the rant? Is it about a stock?
So, yeah, well, it's just about market philosophy in a particular stock that I started looking at. I'm like, this really goes back to my whole Costco thing. I think this is an even better example than Costco of the market being absolutely ridiculous.
Okay.
So,
what is it?
Pre today, because I don't know what the numbers are, but if I told you that over the past 10 years, the S&P 500 has gone up 167%, because that was the number. And you have a company that has barely gone up. Old world company, stable company, okay? And I look at the financials, and the company has increased its revenue by 26.7% over the past decade. But their EBITDA has only increased by 8%. And their net income has actually declined. Do these people not know how to drive? It's unbelievable. And you're growing your revenue over the past decade by 26.7%, but your profitability is actually compressing. And people are paying, I think, 19 times or 19 and a half times this year's earnings for it. And the only interesting thing about the company is a 3.4% dividend that's grown for 48 years with increases. They're almost a dividend king. But it is the most boring company that I can think of, and one of the most boring ones. And it has a higher PE than Alphabet. And I'm looking at the forward PEs, and the company has 6.7% projected growth from the end of 2025 through 2027. And Alphabet has 32%, NVIDIA has like 46%, and Meta has 33% or something like that. And all three of them were trading at a lower forward PE than this company. They were all trading at 17.5 and lower. Alphabet was under 14, actually.
What's the company?
Just one sec. And then I look at Amazon. And Amazon has grown its revenue over the same decade by 840-something%. And they're expected to grow their EPS by 49% over the next 2 years. And they're trading at a forward multiple of like 20.2, which is basically the same as this boring company. And I'm looking at, I'm like, aren't people supposed to not only pay the current value of what the current value for all the profitability they're producing now, but all the forward growth and profitability they're going to expand into? And I'm like, why would people pay the same forward PE as Amazon for Clorox?
Clorox is the company. Wow.
Clorox.
Huh.
Why would people pay a higher PE for Clorox than Meta, Alphabet, or NVIDIA? And it makes me think the market and investors have lost their minds. That after a company proves what it can do and that it can scale, it just becomes a value play. Clorox should not be a value company. Should be looked at. It should be looked at as basically.
Well, hold on.
Okay.
Clorox sells tissues, right?
They sell Clorox, which is a bleach.
Oh.
They sell disinfectants. They sell mops, that type of stuff. Market cap's like $12 billion. They're a company that's been around for 100 years. It's a staple. You see it in every grocery store. Probably their products are in every home. But the company made like $467 million last year. It's not really that profitable of a company.
So Clorox is more expensive than all of big tech, is your point right now.
And when I went through the financials, their operating expenses, the company has I think between all their operating expenses amount to over 92% of the revenue. Their profit margin is like 6.5%. It just doesn't make sense to me that big tech, which are the companies that are going to drive the market forward and make the most money, generate the most net income, buying back the most shares, and have the most growth on the horizon, and are the most important companies to the country, most of them are trading at a lower multiple than freaking Clorox. It makes no sense.
Look,
It makes no sense.
it's a hell of a point. I mean, I had a feeling you were looking at some of these stocks in the market that are a bit cheaper than, or
And
that are a bit more expensive than
here's where I
Mad
get-
7 stocks, which makes no sense.
And here's where I get really annoyed with things, because we have this whole idea, or the investment community has this whole idea. I wrote a whole article about this. It came out this morning on Clorox. And, my gripe with this is when you look at how people are looking at Clorox as a recession-proof company, and I think it's time to change the narrative about what is recession-proof and what isn't. Because if you've only grown your revenue by 27%, but your net income has gone down over the past decade, granted, we've only had 3 quarters of negative GDP growth and only 1 recession. Because of the we really had 2, but because of the revision that they did in 2022, we technically only had 1 recession over the past decade off the revised numbers. But you've had 16 quarters in the past decade of GDP growth of more than 3%. And this is a company that's grown its revenue by not even 30%. Yet Alphabet's grown its revenue by 330%. Meta's something like 500 or 600%, and Amazon's 840% or something like that. I think the market needs to change its narrative on what is a recession-proof stock.
But hold on. Let's back up. Let's try to get like foundational here. Why the market's supposed to be efficient? Why is it giving the multiple to Clorox over Amazon, in your opinion?
I don't know. How about this? Alphabet makes more profit in 2 days than Clorox does an entire year.
So then,
I'm pretty sure my math is correct on that.
Even if you're off by a couple percentage points, like what is the reason?
No, I'm not. Think about it. They did $100 billion in net income this year. Okay, that's 1.9 billion a week or so. Clorox did $457 million in their entire year. That's like a day and a half. No, I'm sorry. It's like 2 days, 2.5 days.
Okay,
no,
so
no, it's less than 2 days. I'm sorry, it's less than 2 days. Like, how can you pay this higher multiple for a company when another company is doing their entire revenue in 2 days?
So let's assume the market isn't stupid.
Not revenue, profit. I'm sorry.
Let's assume if the market's not stupid, then why do you think the market's giving them the multiple?
Oh, I have no idea. But if people are not willing to pay more than 13.5 times for Alphabet's forward earnings, I want to know why they're willing to pay 19 times for Clorox's earnings. Like, it does not make any sense to me.
It makes
There's
no sense at
basically
all.
no growth. All their EPS growth comes from buybacks. That's their entire, over the past decade, pretty much EPS growth is all from buybacks. And it's basically not really that profitable. It's not a high margin business. It's not a business that can expand margins. And the competition is fierce because you have private label brands. You're competing against Procter and Gamble. You're competing.
What about the dividend? 3.3%.
It doesn't matter. I love dividends, but at the same time, the company has how much have they gone up in the past 10 years? 30% or something like that?
Yeah, pretty much.
The S&P's gone up 167%. The dividend is not big enough to matter where you're making up that difference.
I think your broader point here is there is an obvious rotation out of large cap tech, and you're confused about why, which I agree.
Oh, I am not confused about why. People are freaking they don't know how to read financial statements.
I don't know if you can chalk it up to people are stupid. I don't know if it's that easy.
That's not what I said. I said people don't know how to read financial statements.
Yeah, but the market tends to be smarter than the market is stupid in a lot of different areas, but as a sector for them to rotate, they're trying to send a message. And
there is no reason why a company like Clorox should have a higher forward multiple than Meta, Nvidia, or Alphabet. There's no reason for that.
Yeah, I mean, look, I think you're right,
You're
Tanner.
talking about a company that does not have a lot of cash on the balance sheet, a company that has less than 7% growth over the next 2 years, a company that is having margin compression and generating less profits.
So Tanner right here in the chat said the talk on size of earnings is pointless. It's about the multiple of earnings. But you're saying the multiple is more expensive on Clorox.
The multiple is 19.5 times 2027 earnings, and Alphabet trades at 13.5 times. Meta and Nvidia both traded at 17 to 17.5 times. The multiple is higher on Clorox than these companies. Why on earth would anybody pay a higher multiple for Clorox when they have less than 7% EPS growth over the next 2 years compared to these companies, which have on average 30 to 45%? 0 cents.
Oh, you're right. I mean, I don't disagree. I just like we've had this conversation about Costco, now Clorox. I'm trying to get to a deeper understanding of why the market's doing this, and I don't have the answer yet.
There's no reason. And look, Clorox is a great company. They've done great things. They employ a lot of people, but that doesn't mean that the stock should be trading where this should be an 8 PE company, or a 10 PE company. This should not be a 19 PE company if you're going to give a 14 or a 13.5 PE to Alphabet. If you want Clorox to be at a 19 PE, then Alphabet should be trading at 30 times.
Unless you think there is a massive recession coming and people are going to need bleach more than advertising, right?
Which a massive recession is not increasing the amount of bleach somebody's going to buy.
That's probably true.
It's 100% true.
Yeah. Unless you want to drink the bleach because of how bad the portfolio let me that you might have a lot of demand.
It just doesn't make sense. And Clorox is not a company that has grown revenue year over year. I think they grew revenue 7 out of the past 10 years, whereas Amazon and Alphabet have both grown year over year for the past 10 years, and Meta's only had 1 year where they declined. It only declined like very minimal.
Yeah, I mean, look, I feel your point. I think so. Okay, so then is your strategy this year just buy up as much big tech as you can? Is that your game plan?
Big tech minus Tesla.
Okay. I mean,
and we'll get to that in a second. But no, in all seriousness, everybody wants to talk about you pay for growth, you buy for growth, you invest for the future, and people who are value investors don't understand growth. Well, okay, riddle me this. Why are people paying this multiple for Clorox's growth and not for Alphabet or Nvidia or Meta or Amazon? I mean, I understand how to read financial statements. I understand investing. I understand growth. There is nothing that makes sense to me in this market when it comes to some of these companies. These companies that have huge forward potential and huge growth on the horizon. We're not talking about 5 analysts. We're talking about 30 to 40 analysts that are coming up with these numbers. Like, these are the consensus numbers. Even if they're off by 5%, it is still significantly higher than what Clorox is bringing to the table. So, well, everybody who used to say when everything was going up in 2021, oh, you pay for growth, you pay for growth. Okay, well, why aren't you paying for Nvidia's growth? Why aren't you paying for Alphabet's growth right now? Like, Clorox has a higher PE. Like, come on.
Okay, so what did you think about the Tesla reaction today?
I told you that they are going down a bad path.
No, but Steve, the stock was up 6% on horrible numbers.
No, hold on. We got, I don't want to use the term. I got to think of a better term because I don't like the way that it sounds. We got a little tricked with Tesla because now deliveries aren't supposed to happen until 2027 for Optimus. I thought they were going to start delivering at the end of this year.
No. What are you talking about? They didn't say anything about Optimus being delayed.
Not today. It was on X yesterday that they just started pre-orders and it's not getting delivered until 2027.
Okay, well, I don't know what source you're using for that, but
unless it was an April Fool's thing, which it could have been.
It definitely was, dude. I thought Rocket Lab was acquiring some space. Yes, it was definitely April Fool's.
It could have been an April Fool's thing. I didn't go on Tesla's website, but they said the pre-orders are now.
No, that's totally fake, Steve. Totally fake. Completely fake. But you still have a point, right? Like the auto numbers were horrible. 336. I think the lowest expectation was 360. The stock was up 5%. I think you have to give a little bit of credit here to the bulls. The fact that it was able to go up off of the crappiest numbers that we've got in 3 years for deliveries, pretty impressive.
Yeah, wait till Q1 earnings come out.
No, but now I don't think the market necessarily. I mean, dude, if it's not going to tank on deliveries, why would it tank on?
All right, Mr. After Hours, what's it doing right now?
No. Okay, but everything's down after that's.
I'm just saying, what's it doing right now?
And first of all, it's at 270 after hours. In the morning, it was at 252. So you still got a nice swing because of the pump in the trading session.
I think people are wrong in the short term, and I don't think this is a good setup for Tesla at all. I think it's gone lower.
I'm not saying Tesla's cheap. I agree with you on that. I'm just saying it's down 50%. If the market is ready to overlook crappy numbers, aren't they going to be ready to overlook potentially crappy Q1 numbers as well?
Maybe, because it's Elon, and Elon can do no wrong, and people just will do whatever he says. So.
Well, there was another fake article today that said Elon's leaving Doge, and then Elon clarified and said that was fake news. That's another reason it pumped. But even after Elon said that was fake news, that he's not really leaving Doge anytime soon, market still held up about 5%. So,
yeah, I mean, look, there's a lot of things I'm not happy about. I'm not happy that as a Tesla shareholder, Tesla does not have a financial stake in XAI, X, or SpaceX. I think it's ridiculous. I mean, Tesla shareholders should benefit from those companies, and Tesla should own 5% of all those companies. It's just ridiculous that it doesn't. And I don't know. I'm not happy with Musk at the moment. I think too much damage is done to the brand. I'm not just Q1 deliveries. I'm worried about Q2 deliveries. I'm worried about how this year's going to play out from Orno. And I think this is going to hurt the ride hailing if that ever comes to fruition. And I still think the only thing that saves this company is Optimus.
Which they did put out a video today of it walking. So they did put out a little bit of an update today, which is nice. And they said more updates are coming soon. And look, if they imagine Q1, they announce we've collected $150 million in pre-orders for Optimus. I mean, they say something like that.
Yeah, it's the only thing that's going to save the stock right now.
Yeah, I think people would be excited about that, but we got to see if it happens. Okay, last question for you, Steve.
The numbers are going to be bad for Q2 also with auto sales.
Well, it depends. It depends if that refresh on Model Y scales effectively, right?
Oh, yeah, sure. If it scales effectively. Okay, sure.
I'm just saying, if the Model Y...
I'm just saying that there's a good chance that a lot of people that own the Model Y may be a little annoyed at Elon right now, and maybe they're considering not buying the refresh. Just saying.
Well, okay, so this begs another question. Do you think he has enough Republicans, if he's lost the left, to buy the new Model Y in this country?
No.
I don't think you'd easily say no, dude. There's Republicans buy cars too. I mean,
I get that, but what type of cars?
I get it. It's not usually an EV, but
I'm just saying that, I don't think Exxon is jumping to go buy EVs. Just saying.
No, I feel you. I'm just saying the Trump endorsement, I don't think we can easily say Q2 is going to suck in terms of their numbers. We might.
Unless they come out with language around it, you would think that they would have made a statement if Q2 numbers were going to be good, because guess what? We're in Q2 right now. Okay, April's Q2. They see how everything was trending heading into Q2. You have estimates come out that low, that much under what the street was looking for. If you're not coming out with a statement saying, listen, it was a difficult holiday season, we're seeing sales tick up and we're expecting Q2s to be much better, they're not even saying that. That makes me think that Q2 is not going to be good.
What if
they're not even trying to do damage control?
What if Tesla's the new F-150 for conservatives?
If it is, then who knows?
I mean, they're going to buy some Teslas. Okay, let me ask you about this.
Look, I don't like the auto industry right now, and I think that Tesla needs to really scale Optimus. And for the amount of EBITDA and profit that they generate, the market cap makes 0 sense.
Yeah, but the market cap has always made 0. I just feel like that argument.
Yeah, but now you just alienate half the country. It makes even less sense.
I get it, and a lot of parts of Europe are alienated.
Look at BYD. BYD is a real competitor that nobody talks about, and they should talk about because they generate over $90 billion a year in revenue, and they are doing everything Tesla's doing. So, That's going to hurt their China sales. Just saying.
Yeah, well, no, sure. I'm not saying you're wrong, but they just sold 78,000 cars in the month of March in China, which is one of their highest months ever for China. So, like, I get it. You're not wrong about these competition claims, but it's not like Tesla is just silently falling to BYD or
all I'm saying is they're not the only game in town. That's all I'm saying.
No, it's fair. But also, all I'm saying is they're down 50. But like, I think we can't ignore, again, everything you're saying makes sense around the bear thesis for Tesla. And I think a lot of people understand it. But the stock's also down 50%. Could it down more short? Could it go down more short?
Yeah, but it sure never got to where it got.
Yeah. But a lot of stocks should have never got to where they got, right? But a lot of
this is still a $700 billion company that a lot of companies that are $300 to $400 billion generate way more profitability.
It's actually 900 billion. So
yeah, great. 900 billion.
909.5.
Go look at their profitability versus Oracle or Salesforce. It's very similar, and they're a fraction of the market cap.
Yeah, but again, you think people are buying Tesla for profitability?
I'm just making an observation. Go look at them versus Berkshire Hathaway. They're a $900 billion company. Berkshire is roughly $1 trillion. Look at the difference in profitability between the two.
You're not wrong on the numbers. Now it's up to Q1 to see how it plays out. I want to ask you about what Noto said. So I think you read his very, very long post to a account on Twitter about how much they're working hard at SoFi. What is your general response to that?
I mean, I say it every time that I say something negative about it. I always preface it with, I'm not running the company. I'm sure that the people running the company know what they need to do better than I do. And that's why I'm not running the company and Noto is. But I would like to see business banking and more clarity on the tech platform because I think that they're missing the mark on those things. And, you know.
Did this tweet give you any reassurance as a shareholder?
No, not really.
Okay, I'm in the same boat. I agree with you.
I mean, yeah, look, it's good. It's better than him not saying anything. But what's he really going to say? He's taking accountability. He's doing what he's supposed to do. He's taking the blame. He doesn't want his team being blamed, which is what a great leader does, because at the end of the day, he's the one making the end decision. So the blame goes with him, nobody else. And
I think someone's mad about the S&P being down 3% after hours.
It's just, I don't think that SoFi is going to have a bad year. I think they're going to revise up, and I think they're going to do well. My problem is they have a marketing and an advertising problem. And Hood's advertising is vastly superior. And I am worried that when Hood enters in the checking and enters in all these other things, it may take clients, potential clients, that would have went to SoFi away from SoFi. And it could take people away from SoFi into Hood that are current SoFi members. Because when you're going to give a 3% match out and make people lock up their capital for 5 years, the second they do that, they're not changing for 5 years. They're a lost customer. So I think there's ramifications in the back half of the year about who actually becomes a Hood client. And I think that that is something that SoFi needs to figure out a way to have better advertising around the products and services that they have. And quite honestly, they have the naming rights to SoFi Stadium. If it's in their contract where they can actually hold an event there for basically nothing, they should hold a full investor day at SoFi Stadium.
Dude, imagine. I don't know if they would get 80,000 people to show up, but that would be crazy.
Who cares how many people show up? They need to do the same thing that Vlad is doing and the same thing that Karp is doing. And having investor days is important. And they should have an annual conference there. And if not, they should do it at their headquarters. I don't think that they should spend shareholder money on it. But having the naming rights to SoFi Stadium, maybe they can get a deal and do something where they could do it there on the cheap or free. Who knows? But it would be very good for their image if they did that. And I think Noto has to start really talking to retail more than he is.
Yeah. All right, Steve, thank you. Steve's Twitter right there in the chat. I'm sure we'll talk to you more on Friday, and we'll keep going from there.
Sounds good.
All right. Thank you, Steve. Talk later.
Later.
Oh boy, guys, the market is about to hit if we go down about another $1. New lows for 2025, 548 on the S&P, officially a 16-point swing after hours. If you combine the pump we had in that 2% pump when Trump was speaking initially, then it's more like a 22-point swing. And we are almost 3% down, 2.84%. Futures come out in 15 minutes. Obviously, we'll see futures probably get wrecked. Robinhood's down 8%. SoFi's down 7%. Tessie's down 5%. Amazon's down 4%. Palantir's down 6%. Nvidia's down 4%. This really does feel kind of like aggressive for no reason, in my opinion, after hours, unless there's more to these tariffs that I'm not getting from. Again, the reciprocal half nature of these tariffs. You guys, by the way, are right about this whole numbers being wrong thing, because yeah, there's no way these numbers are correct if they're including the currency, because the currencies change every day. So I don't think the market expected this reciprocal half tariff thing. I definitely don't think the market expected our reciprocal tariffs being based on currency manipulation and trade barriers, which are essentially pseudo numbers you're factoring into the actual tariffs that these countries are charging us. I think the market expected 10, 15, and 20% buckets of tariffs, and different countries and different sectors would have those buckets. Now, one of the reasons the market might be down is because they have to deal with China having a completely different tariff rate from Switzerland, from Malaysia, from the UK, from South Africa, from Singapore, from Philippines, from Israel, from Australia. Like, these aren't really buckets of categories the market can sort of model from a mathematical perspective, the tariff percentages and then the sector percentages. These are literally different companies or different countries and different sectors within those countries having totally different reciprocal tariffs from other sectors in other countries, even if those sectors might be the same. The only one that's not the same for is auto. Auto's 25% across the board, but everything else outside of auto looks like it's going to be reciprocal based on the percentage that they charge us, which I did not think in my wildest dreams this would be the policy. I am so thrown off by this. As soon as he said it, you guys probably saw my face when I was live. I was like, what? First of all, it took him like an hour to even get to the point. It was like a campaign speech for an hour before he finally gave us the meat of it. And this is the meat, what you're looking at right here. Russia is not on the list. That is correct. I don't see Russia, Mexico, and Canada are not on the list. Mexico and Canada have their own set of tariffs. Israel's on the list. Egypt's on the list. El Salvador's on the list. Maybe there's a larger list, but these are the two pictures. Oh, wait, they did post more pictures. They posted like 7 pictures. Pretty much every country, dude. I don't see Russia here yet. I'll go through them more tonight. I see Kenya, Iceland, Fiji, Bolivia, Venezuela. I don't see Russia. Yet. But this is, yeah. I mean, could this affect Grab? Yeah. Could it affect Nubank? Could it affect Mercado Libre? Yeah, it could. It could affect all. I mean, if you were hiding in the emerging markets outside of European defense contractors, Australia is on the list. This might be, and obviously, the EU might also get hit from this. So companies like Rheinmetall might open down tomorrow based on this. Australia is going to be a 10% tariff. It's capped at 10%. So Australia has 10%. So we have 10%. Chile has 10%. We have 10%. So if they have 10%, we are doing the same 10%. It's a lot of tariffs. Yeah, Ukraine's on the list as well. Let's get some more updates and coverage on this, and then we'll keep going from there.
Some of these 34% on China, plus the 24%.
Stocks moving sharply lower as he spoke in the last hour. The SPY down more than 1% right now. Q's down as much as 3% at the lows after hours. Let's get to Megan Castellan, who's got all the details. Megan.
Hey, Melissa, absolutely. A lot coming out from the president just in the last hour. The top line being that the president is implementing a 10% across the board baseline tariff on nearly all countries. That's effective on April 5th. So just a few days from now, almost all imports will be subject to at least a 10% tariff. He is also going country by country for about 60 of what the White House is calling the worst offenders and imposing a higher, what they call reciprocal tariff against those countries. To give you a little bit of a sampling, China subject to a 34% tariff on top of the 20% tariff that's already in effect. The EU subject to a 20% tariff. Vietnam, 46%. All of those will take effect on April 9th. I'll also say the president is declaring a national economic emergency here. That's what's giving him the power to do this and to regulate imports. I also want to emphasize there are a few exemptions. For Canada and Mexico, they will continue to face the 25% fentanyl tariffs, and the USMCA compliant goods will continue to be exempt there. So no changes for those two countries. Also specific goods, autos, auto parts, steel, and aluminum, and some of the other ones that we expect to be forthcoming, copper, lumber, pharmaceuticals, and semiconductors. All of those goods specifically will also be exempt from the reciprocal regime, but will face their own tariffs, so far set at about 25%. Just finally, Melissa, I would flag the White House does not look like they're messing around on this. They are not really welcoming negotiations with other countries. They say if other countries reach out and offer to lower their tariffs, they're ignoring the decades of trade barriers that they've had up. They're mostly worried about non-tariff barriers, and they don't seem willing to lower these tariffs in exchange. Melissa?
Megan, didn't the press secretary just today, I think, say that President Trump will always take a phone call? So what's the message here?
That was yesterday. Absolutely. Yeah. I know. So they want to look like they're open to talking, and we will have to see in the coming days. There's not a lot of lead time that allows countries to make deals here, but maybe the tariffs could take effect and then they start to come down. We also heard the Treasury Secretary told lawmakers just yesterday that these would be the maximum level of tariffs and they would come down from here. We do have to wait and see on that. I think the next step is that countries might start to announce retaliation. We will see at that point how this White House responds and if they try to go higher or if they try to start a conversation.
That baseline 10% across goods, is that to prevent companies from country shopping, tariff shopping, so to speak?
Yes, that's exactly right. They say they're really concerned, especially in the first term, when the tariffs were mostly focused on China. We know this from companies and from industry as well, that a lot of folks were looking and setting up shop in Vietnam or Cambodia. That's what they want to cut down on, is that transshipment. They say at least there's 10% across the board. Yes, you might still leave China if there's a 54% tariff there to go somewhere else. But if that's at least the baseline, they're hoping it cuts down on that to really send a message here.
All right, Megan, thank you. Megan Casella joining us from the White House.
Besant just gave some statements. He said, well, look, in my old business, I was very concerned about market movements, and I'm trying to be Secretary of Treasury, not a market commentator. He was just asked about that right now on the negative market reaction to tariffs. AKA, he doesn't care about the market's reaction to tariffs. He then said, don't panic, don't retaliate. As long as you don't retaliate, this is the high end of the number. That's not new. He said that yesterday night. But what is new, the China, I showed this when Steve was on, the China cumulative tariff is 54%. And Besant confirmed that just now when he was interviewed. So CNBC is reporting that the White House press secretary confirmed the 34% tariff on China is in addition to the existing 20%. That's what we put on them, I think, a week and a half ago. That brings the total tariff rate on China to 54% once it goes into effect. Scott Besant, literally 15 minutes ago, also confirmed. He said, quote unquote, I think the number is 54%. So he'll probably give us confirmation tomorrow when they discuss this. 54% is going to be interesting with China. I don't know. I mean, that could be another reason the market's upset right now. That's a lot. Now, obviously, the goal is to get China to take down some of their tariffs, and we will take down whatever this 54% number looks like. I don't know, dude. I really don't think the S&P deserves to be down 3%. I don't think Apple deserves to be down 5%. I mean, Steve's example, as eccentric as it was, comparing Clorox to these Max 7 companies, he has a hell of a point. Clorox trading at 19 times with Google trading at 14 times realistically makes no sense. I think everyone's been trying to figure out why is the market not giving Google that momentum. And the only two answers are you think it's a recession that's happening, and for some reason Clorox or Costco will be more valuable during a recession, or B, there is a massive rotation out of the biggest trade of the past 2 years, which is the Max 7. I mean, I remember like, what is it? End of 2023, mid 2024, the entire market's biggest concern was not even inflation, not interest rates. It was, can the Max 7 hold up the market? Because everything was so contingent on the Max 7. That's not the case anymore. We've seen a relatively decent rotation, even if it hasn't brought the broader market up, but we've seen different sectors get momentum. Maybe the market is just ready to keep piling into that trade until they see a reversal of some of these macro indicators, which in this case is tariffs. Google's fear of losing search revenue is the main weight on the stock. Yeah, I don't disagree. I mean, each of these Max 7 companies have their own individual bear cases that are valid. But again, for them to be trading less than Costco and Clorox is the big question right here. What does Clorox have to do with tariffs? It doesn't really have to do with tariffs. It more so has to do with the fact that a company that's not growing realistically anywhere near compared to something like NVIDIA is more expensive than those names. And I think that's the point Steve was trying to make, is just like, wow, Apple down 7%. Yeah, dude, Apple doesn't go down 7% like that. I think that was the point Steve was trying to make, which is just like, why is the market giving Clorox and Costco the multiple that they're not giving to companies that are actually growing? And if you want to take away the growth, they're buying back their stock. Clorox is not buying back their stock to the tune of $70 billion. You know, like, and now that the stock has objectively gotten cheap, I mean, you could say that the buybacks are really going to be effective. But the market's not giving them the multiple. Apple right here down 6.9%. Wow. 6.9% on the day. Let's get a little bit more coverage on these tariffs, and we'll keep going from there.
With so much news, it is Liberation Day, as it's coined, Guy, and we got a list of tariffs. So what do we make of it? We saw the market reaction. No surprise, lower in the after hours so far.
No surprise. Now, the day actually sort of made sense. I mean, market route, we talked about this sort of yesterday. Personally, I thought there'd be sort of a pullback, not as draconian, not as robust. The market would like that. We would continue to rally. The bond market would sell off. To a certain extent, we saw that during the day. Obviously, a lot of things have been reversed now. So what do you try to make of this? Well, Treasury Secretary Bessent and President Trump have asked for lower rates in terms of 10-year. Announcement like this might get them the lower rates. The question is, at what cost? That 5,500 level in the S&P clearly is going to start to come into play again. But, you know, secretly, I wonder myself, have deals already been in place, despite what they say about we're not going to negotiate, you can't call us, or things in place where a week or so from now, there's countries at the White House or the Rose Garden that are acquiescing, and there's some sort of detente in terms of what's going on. So maybe this is sort of act 2 or 3 in a 5-act play.
Yeah, I think the debate, and you know, a lot of folks have been talking about this, is this policy or is it politics, right? And so at the end of the day, it's kind of what Guy's just talking about, is like, are they going to take the calls, to your question? Are they looking to do deals? And, you know, when I think about how targeted some of these tariffs are and how basically whatever they come back with, these countries that are being targeted, a lot of these are really in Trump country. If you think about it, they're in red states. You think about what happened with farmers going back to 2018, the trade war. I mean, they collected tariffs. They collected tens of billions of dollars in tariffs from farmers. And then you know what they ended up doing? They ended up giving it back to them in relief, you know? So you're going to do that to the auto workers in, you know, in Michigan. I mean, the list goes on and on. So at the end of the day, I'm probably more in Guy's camp that, you know, they're talking a tough game here. I think they probably want to do some deals. A lot of these countries are going to come to the table and say, we're going to do this, we're going to do that. And they probably won't end up doing them, you know? So at the end of the day, I think it's one of those things where maybe they're focused on the yield. I think they're going to have to get focused on the stock market pretty soon.
We are talking about certainty and whether or not we have any more certainty. As Megan had mentioned, even though we know these country-specific and the baseline tariff regime that we will operate in, we don't know the sector-specific ones, such as on pharma, which will face tremendous tariffs because many of the raw materials come from China. We won't know semiconductors, which also will probably face some pretty stiff tariffs.
True.
But we do know for autos, we saw a turnaround in the after-hour session. Somewhat. GM was down as much as 3%. It's now down 1%. You're pointing out also the Mexican peso.
Yes, and that was sort of, I actually rallied a little bit. I don't know where it is.
S&P officially down 3% after hours, 547. We hit 546 for a second. We're going to get futures opening in a second, and we'll see what futures look like, but most likely they will be down.
Right this minute. But I think, do we have certainty, not on the things that you said?
Yeah.
Do we have certainty on what the worst case scenario is? I think we do. I think this is the biggest tariffs we would see. I agree with both Guy and Sunshine Dan that it is very possible, and probably more than 50% likely that we do see some movement there. It's interesting after the first round of tariffs going years back, how there was such a push to leave China manufacturing, go elsewhere,
Right.
go to Vietnam, go to Thailand. Well, okay, so that's sort of been thrown into flux. I think, you're right to see the 10-year. Could the 10-year come down?
Futures open down across the board. Dow Jones down 2%, S&P down 3%, NASDAQ down 2.5%, small caps down 4%. The VIX futures are up 5%.
And inflation go up. Both of those things seem likely. So that's sort of interesting. And I think, so who does it benefit? I think it benefits a Walmart over a Target, but doesn't absolutely benefit either of them. So if you've got power, you're going to be relatively better off, but not better off than you were yesterday.
I'm not the desk.
All right, folks. Yeah, this is what we're dealing with right here. Markets are not happy with this. It looks like they will continue to not be happy about this. This China 54% number, you guys are right in the chat. That's definitely probably the reason why Apple is getting hit. I mean, if we really do put 54% on China, Apple, Nike, Elf, all these companies that have massive exposure to China, there's Trump's signing the executive order in the Rose Garden. Yeah, they should have higher costs, which should technically hurt margins. I mean, there's an argument there that the market's pricing in right now, and that's why it's down. Having said that, I mean, how low do prices get? Sentiment obviously is disgusting right now. I think we're not going to get a real read on the market. S&P 500 down about 3.1% after hours. I don't think we've had a single day this year where we've seen the S&P down 3.2%. I think maybe we've seen 2.5, 2.7 back in the end of January when the tariff stuff started really heating up right after Trump got inaugurated. And then that went away. Then February, we had that kind of local top, and then we came back down. But I never saw 3% after hours. Here it is, 3% after hours. Hood down 9%, SoFi down 6%, Palantir down 7%. Those Palantir puts for $60. I mean, they are definitely going to be up tomorrow if this continues to hold down. Celsius down 4%, Google's down 3%, Uber's down 5%, the NASDAQ down 4%, Grab down 4%, Reddit down 6%, Rocket Lab down 7%. Rocket Lab had a great day. It was up 7%. Now it's giving all of that right back. And then Meta, right back to the lows of Monday, down 5%. Again, I think we need a couple days to see how the market's thinking of this, because as one of the analysts just said on CNBC, like, is the worst of it announced? Yeah, I would say so as well. Now, maybe it can get that much worse, but how are we getting worse than 54% on China? Like, if we get worse than 54% on China, then, like, I mean, Trump can welcome a recession coming. Like that. I mean, this is just going to get ridiculous right here. So if this is the worst, Lululemon right here down 10% after hours, and Nike down 7%. If the Apple down 7.5, my goodness. I want to know the last time Apple was down 7.5%. Forget after hours, but in a day. I feel like it's either August 5th, which was very quick, or we got to go back to COVID, because Apple doesn't fall 8% in a day. It's not even that high beta. With the Apple tends to be a boring stock. It's not supposed to move like more than 1 or 2%. So, yeah, if the worst of it is now factored in based on how aggressive these announcements were, then eventually the market's got to move on from this. Maybe it is going to be really interesting to see kind of how Tom Lee thinks about this as well. Obviously, he's called for a face ripper, V-shape, led by Tesla. As of now, and it's only after hours, it's only been a couple hours since we got the announcement. That is not what it looks like is taking place, even though that is what it looked like in the morning that was taking place. And, again, Tesla's horrible numbers still maintaining a 5% gain definitely gave a lot of confidence. And I think that confidence was warranted to an extent, because for Tesla to not tank what I thought should have been 20% after those numbers felt like the market was ready to move on. But I guess they didn't expect these types of reciprocal universal import tariffs. I think they expected buckets of tariffs of 10 to 15 to 20%, not 54% on China. And that's what we got right now. We have seen this movie before. That is correct. I agree with Austin. I am not selling anything. For anyone who wants to know my strategy is not selling. My strategy is finding the cash to buy. But my strategy also is being patient. I think there's not a problem with being patient here and seeing look, I haven't really bought Tesla much this year. I do agree with Steve. It is very expensive here given the growth that they're putting up. However, I also think there's an argument that sentiment has led it to fall 50%, and that's enough of a bottom. However, if the tariffs are as egregious as what after hours are showing us right now, like, can Tesla justify 280? No, there's just no way, right? It's just no way. It can't justify these levels if the Nasdaq and the S&P are down 4 or 5%, and if they're going to go down another 2 to 3%. You just can't have these. I mean, if Amazon can barely hold 180 right now, it's going to be hard to see some of these hold their levels. However, if you're long, which I think a majority of us are long, and you're not strategically positioning your portfolio just for 2025, then we should get some good opportunities if this continues to get hit. Or this might be the opportunity, and this is the bear trap. I mean, I don't know. I think we need a couple more days of data, a couple more weeks of data to see how it's playing out. But as of now, we are red. Yeah, NVIDIA is probably down because of the taxes in Taiwan on GPUs. That's definitely, or the tariffs in Taiwan, that's definitely going to hurt NVIDIA. And then the Apple China correlation makes a lot of sense for why Apple is getting hit 7.5% after hours right now. Semis should be excluded. Yeah, I agree. I think semis should be excluded. I thought going into this tariff announcement, they would exclude certain sectors, and they kind of did, but nothing like that dramatic, like, oh, all semiconductors are excluded. They didn't say that. And if they did, maybe NVIDIA would be down, but not down that much because the market wouldn't be that concerned about it. But it was a flat 25% on autos and then reciprocal against imports against every other country, which includes semis, pharmaceuticals, etc. Why is Hood getting hit so bad? Well, again, Hood's a beta on the market. Market goes down, Hood's going to go down because trading volumes will go down. Bitcoin, let's take a look at Bitcoin. We haven't looked at that. Bitcoin probably goes down if the Nasdaq continues to fall. Bitcoin, yeah, there's 88 to 84. Again, we got that pop to 88 when Trump started speaking, and it was so weird, right? Like, let me know if you have an explanation for why we popped to 88 and to Tesla to 290, because it was so weird that happened. It was just like a random 5% across the board. I mean, it kind of feels like some manipulation. It really doesn't think like that. I don't think Trump said anything that could justify it. But then less than 15 minutes later, it goes the opposite direction. So Hood, obviously, if Bitcoin trading volumes go down and overall market volumes go down, that's going to affect Hood. Also, you got to think about it logically. I mean, if the market's tanking, do you really want to take money out of your bank and put it into Robinhood? Right? Like, no, most people are probably going to not. I mean, we saw that in August. In August, net deposits went down from 4 billion to 2.5. That's 1.5 billion in reduction in net deposits. August tends to be a crappy month anyway, but still, when you have a crappy month, you might have some people saying, hey, I just don't want to put my money in something like a Robinhood or a SoFi or a Fidelity because I don't want to invest it. I want to leave it in my bank account. Granted, Robinhood has the 4% APY, so that might be the incentive, but that's the point, right? People are just not going to be that excited to trade. Yeah, a lot of you guys are saying market manipulation, market makers, algos. That was weird though, right? Like we were all jacked up. We're like, oh, 5%. All right. Hello, Mr. Market. 5% on crazy tariffs, and then boom. Completely changes. Look, at this point, I think we need to see the data on how this impacts the market, because anyone defending these Trump policies, you're going to have to make the case for why they're actually going to lead to the results that Trump wants, which is, what does he want? He wants increased manufacturing in the United States. He's got this whole investment thing about $5 trillion being spent in the United States. Is it actually going to be $5 trillion? We don't know. It's $5 trillion in commitments. Will it legitimately be $5 trillion in investments? We'll find out over the next 4 years. So he's got like that argument of like, okay, TSM is putting $100 billion into the United States because they don't want to deal with tariffs. So that's like, yes, that's good. But then this manufacturing renaissance that he's so excited about, are we going to get that? Are we actually going to get that? And if we don't get that, then I don't know if the impact of these are that effective. And then finally, I think the major impact is the External Revenue Service, which was not announced today, but that will have to collect what Peter Navarro says is $600 billion in yearly tariffs. I am very skeptical we're going to be collecting anywhere near $600 billion in tariffs. New low for the S&P. There you go, 544. Officially new low for the year after hours, down 3.3%, 544.74. And if we don't collect those tariffs, then do the other countries lower their tariffs so that we can take off our tariffs, which is the end result of what Trump really wants out of this. Like, there's got to be those scenarios. Either we get more investment in the United States, more jobs in the United States, more tax revenue from tariffs in the United States, or we get those tariffs to go away from the other countries so that we can take off our reciprocal tariffs. Those are the core 4 outcomes you are looking for if you believe these policies can work. And we got to see if that happens. He also didn't talk about TikTok either. He didn't talk about TikTok, so we didn't get any analysis from that. Amit, do you see any opportunities right now that are a sure shot? So nothing is a sure shot in this market. However, like, yeah, I like NVIDIA. I like Google. I like big tech. I mean, if this is a year to accumulate big tech, then so be it. I mean, I just like, do you sleep well at night owning Nike or Google or Meta, like, or even Apple? Like, I sleep better at night knowing I'm more concentrated in big tech, and I don't really have a ton of big tech. So this is the year where I diversify into big tech, which is quote unquote my diversification. I don't think I'm that upset about it. These are the companies that have the balance sheets and the free cash flows to support themselves during tough times, especially if valuations get compressed in a recession. But again, there is no recession, in my opinion, because of the job market and the labor market and the inflation rates that are still holding steady, and they're not increasing dramatically. So the private payroll data we got this morning, the initial jobless claims we got last week, where's the recession? Unless the tariffs end up leading us into a recession, which all bets are off the table on that. But I don't know how, again, I said this a couple weeks ago, but any stock you buy, I think it has to be benchmarked against NVIDIA and Google, right? It has to be benchmarked against a lot of the Mag 7 companies that are trading at ridiculous multiples while putting up amazing growth, buying back their stock that is getting cheaper and cheaper. So any stock that like the reason I'm so heavily concentrated in Grab as well is because I've done so much research on it. Maybe I'll be wrong, but I can sleep well at night knowing I've done the research. I could be wrong about it, but I've done enough research for me to feel there is a asymmetric opportunity in Grab versus Google. If not, that money would be in Google or NVIDIA, right? But I've done the research on Grab. So I feel like any opportunity that is trading at 52-week lows or 2025 lows, which there are plenty of them, like a Block, for example, an XYZ that Steve keeps buying, that for the life of me, I don't really understand that thesis, but he loves the numbers on it, and the numbers are good. I still don't love the stock or the company though. But like, he's done enough research where he feels this is better than NVIDIA and Google right now, and that's why he's buying. So I think anything you think deserves your capital outside of big tech, there just has to be a lot of conviction behind it, like a Robinhood, for example, as well, or a Palantir, even though I know a lot of you guys have been in Palantir for a while, or a SoFi, right? Like, if you have conviction on SoFi, you're probably not selling at 11, and you probably shouldn't be. It's 11, like could it go to 7 or 8? Sure, but I mean, that like 11 already to me feels ridiculous given the growth rates that they're projecting. So yeah, I don't think there's anything sure in this market, but if you're sure about it, then it's easier to justify. Wow, ARC, we haven't looked at that in a while. That's down 8%. ARC Innovation, there you go, down 7.6% after hours. Zocold says this is what working OT is for. 1000%, bro. This is when, like, honestly, the best part about these moments is if you have some cash on the side, if you have some extra disposable income, you deploy it. This is what 99% of the world does not do when shit hits the fan and everything looks like it's falling apart and Apple's down 8% after hours. You know, if you have done the research and the due diligence on certain companies and you feel that their prices are discounted, which all these prices are discounted across the board, whether it's Robinhood, Amazon, Palantir, Tesla, NVIDIA, etc., you buy. You take the stab at it. And the majority of the world looks at you and laughs because they say, I told you the stock market was a scam, but we all know what's going to end up happening over the long term. And so now I think the question is going to be, what extent of damage and pain are we going to see? Someone said, can you share your Grab research? I just posted in the chat. I did a long thread on it a couple months ago. So you can read that right there in the chat if you are curious on that. Yeah, shout out to Buffett, bro. $320 billion in cash. I mean, he's chilling. Now, maybe he's deployed that cash over the past couple of weeks and we don't know about it because they haven't filed it yet. But this is the moment where I think he starts to say, hey, maybe it's time to go a little more shopping. Maybe it's time to get a bit more excited about valuations. I mean, I keep saying this, but I think PayPal is the easiest thing Buffett could buy. I really do. PayPal, down 4% right here. Even Nike, dude. I mean, I don't love the business, but I mean, I don't think it would be crazy for him to take a stab at Nike either. Like, a lot of these dividend-paying stocks that are still down aggressively for the year, Berkshire has a lot of cash. Now, if Berkshire starts buying a lot more bonds, I mean, they already have more treasuries than the Fed. If they increase their treasury position, that's when they're basically signaling they think shit's about to hit the fan even worse than it has been so far, which is S&P basically down 7% for the year. Because if they buy treasuries with stocks trading at these discounts to lock in their yields, because they think those yields are going to go lower and they think the equity risk premium on the stock market is simply too high to pay, then yeah, that'll be very telling of what Berkshire thinks about right now. By the way, Berkshire is still up 18% for the year, which is just incredible. I mean, it is down 2% after, 19% for the year. It's down 2% after hours. But for all the shit Buffett gets, like Berkshire, 20% year to date. Absolutely incredible. Absolutely incredible. Yeah, futures, very ugly as well. NASDAQ down 4%. There's our futures getting hit badly. No more manicures, dude. Can't afford the manicures anymore. Those $30 are now going to go into equities over my nails. We can blame the tariffs. We can blame the tariffs. Saw someone say you should think of cash as a call option itself. Yeah, I mean, I agree. Cash is a position. It's always been a position. It's just the position that obviously for the past couple of years has been horrible, but so far this year has not been the worst. All right, let's end it out with year-to-dates in the chat. If you feel comfortable posting, you can put your year-to-date percentage in the chat. Any tariffs on Russia? I don't have any updates on that. I'll be doing a lot more research tonight on these tariffs, and then I'll bring whatever I can tomorrow on the market open. For those that are new here on the channel, discovering it for the first time, hello, my name is Amit. I am sponsored by Saratoga. No, I'm just kidding. We do a market open, market close every single day, 8:45 in the morning Eastern, 3:45 Eastern on the close. And so tomorrow I'll have plenty to say on the market open with these tariffs. My year to date is 12.6%. 12.6%. I feel like that's going to get worse tomorrow if it continues to hold the way it is. That's a negative 12.6, by the way. It's not a positive, but it's negative 12.6. I see a lot of negative 10s, negative 5s, negative 20s, negative 8s. I see very few positives. And if I see the positives, it's more like +4, +5. Yeah, we see a decent chunk of negatives. Well, the one good thing about the stream and kind of this whole community here is that we go up together and we go down together, unless you are perfect at hedging your portfolios, which if you are, congrats. But if you're not, you're like the majority of long-term investors, which means that if the market goes down, things will go down. I'll say this again, as I say every time when it's this red, you gotta kind of, if you're not maxed out on leverage and you're not getting margin called every other email you get from your broker, then you chill out. Then it's like, all right, I'm not as rich as I was a week ago. It is what it is. Like, the one beautiful thing about investing is that you have the potential to make 100,000 in a day. I've seen that. And then lose 100,000 a day. I've seen that as well. And it sucks. It's there's no denying it sucks, but it's really awesome when you're up 100,000. But you got to go through the really sucky moments of it, aka 2022, to get to those amazing days. And so the far majority of people close to you in your life will never experience the euphoria of being at your 9 to 5 and checking your portfolio and seeing you're up $15,000. But you will. But they will also never experience the pain of being down 15,000. But you got to have the pain to have the gains, literally, right? And so if you're not maxed out on leverage and margin and you're super afraid of managing the portfolio, the best way to manage it is just not look. Or buy the dip, which historically tends to work out. Now, if you are on leverage and you're maxed out on leverage, I think you kind of gotta get off the leverage. S&P 500 now down 3.6, officially another new low for 2025, 544.2 after hours. If you're maxed out on leverage, I mean, the best thing to do right here is try to reduce some of your exposure. Now, you might have to sell and take a loss on something. Sure, you might have to do that as well. And maybe this is the bottom and you would feel like an idiot for selling right now. So there's kind of a personal decision you got to make. But if you're maxed out on leverage and you're getting margin call emails from your brokerage and you realize, hey, my margin maintenance is like 200,000 and my portfolio is down to 150 and I need to sell this stuff and get off margin to be able to qualify for the margin maintenance requirements, the peace of mind of just taking a little bit of a loss and just like chilling out on margin is better than every day looking at the portfolio to see if you're just above the maintenance requirement. Like it's not the healthiest thing. So granted, it all comes down to how much you can survive, right? A lot of this is about cash preservation versus just capital appreciation, because wow, the S&P, it's about to go down 4%, dude. Holy crap. 543. My goodness. If this is the bottom and the market goes up and then you're fine on your margin requirements, then like you're going to feel bad for selling, right? But if it's not and we're going much lower, you're going to have to sell a lot more. So it's one of those things where if you are maxed on a leverage, you kind of got to make a personal decision here and decide what's the best option for you. Wow, dude, they're really taking it lower. 3.7. Tesla's down 6. Apple's down 7.1. Hoodie's down 10.6. The S&P 3.8. The S&P 3.8. Tom Lee's not on today. Unfortunately, he canceled. I'm sorry for that, but he'll be on tomorrow. Or not tomorrow. He'll be on next week. He feels bad about canceling, but for whatever compliance reasons or whatever, they had to cancel. But they should be on next week. Any meetups this summer? Yes, the meetups are still happening this summer. So April, Toronto is pretty much confirmed. On Saturday, I'll be putting out the Google Sheet to sign up and all that good stuff. Most likely the 25th, 26th weekend. So the weekend after Easter in April. Toronto still happening. Hopefully those in the region can make it. And yeah, so that'll be April. And then May is likely going to be Houston. May is going to be Houston. Most likely going to be Houston. And then the summer is going to be the UK and France, and then probably Miami. So that's the lineup we got right now. Toronto, Houston, UK, France, and then Miami. So I'll get more details on that in the coming weeks. But yeah, dude, we're not going to let the S&P going down 4% after hours after Trump wrecked the market destroy our meetups. I will go on margin to afford the meetups. Okay, no, I'm just kidding. We can still afford the meetups. It's not that bad. Yet, who knows, dude? When I come out and I say, "Yeah, guys, so I think I love you guys, but I think we should do the meetups in 2026." That's how you know it's bad. That's how you know it's bad, dude. If I can't buy the plane ticket to freaking Houston, that's how you know it is bad, bro. I hope it doesn't get there, but you guys will know if it gets there. 542.15 on the S&P, down 3.7% here right now. Is Texas still May? Yeah, most likely. Houston, Austin, Dallas, most likely going to be May. So yeah, May will be Houston, and then this month will be Toronto. yeah, dude. If I start drinking Aquafina and not this stupidly expensive Saratoga brand, then that's how you know things have changed. That's how you know things have changed. Family members calling you yet? Dude, my dad called me in the middle of the day when we were pumping, and he was just confused. He was like, "Why is the market up?" I'm like, honestly, Dad, I don't know. Like, I think the market is kind of okay with the tariffs, yada yada. I guarantee as soon as this market closes over, he's going to be pretty damn upset because obviously the market's tanking right now. But yeah, I'm sure a lot of you guys are going to have to deal with some family member or friends if you were the reason they got into investing. And quite frankly, dude, it's really funny. It's like let's say you got your best buddy from high school into investing and he made some money on a bunch of stocks and now he like trusts your insights or whatever. It's kind of like being a money manager or a financial advisor, but you're not getting paid. So clients call you if you're a financial advisor and they're like, what the hell is happening, right? What's your explanation for this? When it's your family and friends, it's the same thing, except you're not getting paid. So I guess for anyone who wants to be a financial advisor, it is good experience in learning how to deal with it. Because like 99% of it is psychology. I mean, this is just a fact, right? It's less about explaining why tariffs tank the market and more so about the psychological and philosophical reaction that someone should have in these moments. But yeah, I'm sure a lot of you guys, if you got your friends or family into investing, you're going to have to deal with it. Robinhood right here down 11.4%, below 38, 37.60 on Hoodie. SoFi right there down 7.3, and the S&P 500 down 3.5 currently on the day. People always talk about how they miss dips and they still won't buy this one. Yeah, I mean, look, It's a fair point. And there's two types of people when this stuff happens. They hate the people that say what this person just said right here on the screen, that, oh, you should buy the dip. This is the opportunity. You miss it. The reason those people hate when you say this stuff is because they think it's going to go a lot lower. So they don't believe in DCA, right? They think DCAing is stupid because it's like if the market's going to go lower, why would you DCA? And then there's another group of people that think that exactly what you're saying right here on the screen, that this is the moment when people get so bearish, and it could get a lot worse, but you still, if you're not perfect at timing the bottom, you take a stab at it. And if you have 10,000 to DCA, you don't have to go 5,000 in right now, but if you go even $500 out of that 10,000, just to like get into the game, because it's very, very hard unless you have a crystal ball and can easily see that we are heading back to 5,000 on the S&P to decide to wait. So Doug says, yeah, people hate the guy who says I'm waiting for Hood to get to 15 so I can buy the dip. Yeah, I mean, look, if you're waiting for Hood to get to 15, you might get it. But it also might not ever happen, and then you might have to buy it at 45 instead of 32 or 37, right? So it's such cliche analysis around dollar cost averaging, but in these moments, I feel like it's one of the only things that matters. It's like, if you are in this for the long term, and it's got to be the right companies, right? It's got to be if it's the S&P, then it's America, and you don't really have to pick the companies. But if it's Apple, your question is Apple going to be relevant 4 to 5 years from now? And are they going to be more valuable than they are 4 to 5 years from now? I think the answer is yes, although I'm not willing to put my capital behind it because I do think Apple is expensive, even with the 7% decline. Yeah, Apple still, to me, the growth or the lack of growth does not justify these multiples. But whatever stock it is to you, if it's a good company, there's good quality, you know they're going to be around, and even as I'm saying, the multiple doesn't justify Apple, they're just going to increase the buyback even more, right? So they're going to be able to artificially intelligently engineer their financials. Like, if it's a good company, they will be around and they will survive. Amazon's not going anywhere over the next 5 years. So the question is 183 a fair price to pay on it? And that's subjective. But waiting for Amazon to go back to 80 like it did in 2022, I don't know if that's the best mindset here. Regardless, it is aggressive. It is an aggressive decline that we're seeing right now. Come to Dubai. Oh boy, dude, Dubai's expensive. If pound was back at 125, I would say yes, but I don't know. Dubai's a little expensive given this market. But see, I'm making a joke out of this, but like that's the point, right? When there's a wealth effect, when you feel like you're not as rich, you start like saying, well, I probably can't afford going to Dubai, which I think I could, but like that's just a lot of traveling. It's probably not that, it'll probably happen. Singapore is on the docket for 2026, and then I've always wanted to go to Dubai, so that's probably on the docket there as well. But more of this year is going to be domestic for the meetups because it's the first year we even doing the meetups. But next year is going to be a bit more international. But the point is, yeah, I mean, like people are probably not going to have the disposable income to say, let me go on a vacation, let me go travel, and obviously that could affect company earnings. I fundamentally disagree with Steve on this argument, by the way. I mean, he's made this argument over and over again that, oh, well, Meta's recessionary proof. Bullshit. No, it's not. Meta will survive. Nothing's going to take down Meta, but absolutely companies are not going to say, let's spend more money if consumer confidence is down on ads. No, that's just wrong. Like, no, like like if consumers aren't, if you're not clicking something in a Facebook ad and then buying it, AKA converting so that the advertiser gets the ROAS is what Meta calls it, the return on ad spend. Why would they spend more money? Like, it's just logical. Now, there is an argument that says, oh, well, all the advertising is going to suck in a recession, so people will pile into Meta or Google because that's the best they've got. Sure, but that doesn't mean that ad budgets are not going to still go down. Yes, there might be a reallocation from like the radio ad back to Meta, but it doesn't mean that overall budgets still don't go down. And if they do go down, the market prices that in and they compress the multiple. And Meta survives, but obviously, the stock gets hit. I would find it very surprising if Meta and Google are up in a recession, if people aren't buying as many goods and services because advertisers decide to consolidate into Meta and Google, which could happen, but still could lead to a decline. Same thing with Amazon, right? Like people are like, oh, well, people are not going to want to shop anymore, so they're just going to keep shopping from their laptops because Amazon already has the cheapest prices. Sure, but you got to remember the stuff that Amazon sells that is so dirt cheap, they don't make money on. They barely have a 5% operating margin internationally. They now have an 11% operating margin in the United States, but still, they don't make a lot of money on those random Chinese goods. And then B, a lot of those goods are from China. and there's going to be tariffs associated with it, which means those Amazon cheap things that people want to pile into in a recession might not be as cheap anymore. So, obviously I think everything can be affected. But it's a question of how it ultimately plays out. Do we have some bots in the chat? I'm sorry if we have bots in the chat. The bots are coming into the chat because the S&P is down. What is this? XA171Z is the gem of 2025. It's literally owned by Elon Musk. Thank you, bot. Urban. Currently, my portfolio consists of 90% of XA171Z. Thank you so much. It's so nice to know that the safety trade is X117AZ. Dude, how many bots are in here, bro? They've realized everyone's done with stocks, so this is the time where they're targeting finance streams to tell you to invest in XA1Z17. Dude, I've seen this comment a billion times. I still don't know if it's even a real crypto. Like, it just feels like it's all nonsense. All right, cool. I think that's it. I think we're done for the day. CNBC reported that semis seem to be exempted. Okay, that is actually good, but NVIDIA is not reacting to that. I have not confirmed that. NVIDIA is still down 4.4%, 105 right here. It's good if semis are exempted. I mean, that would not be bad if we got a semi exemption. Oh, I think we have an update right here. Okay, let's see. I don't know if they talked about semis right here, but let's get this one update. And then we'll end out the stream for today.
Who's got details of what exempt from Trump's tariff announcements means. Megan, what do you have?
Hey, Melissa, as we continue to parse through the details of what exactly was just signed in the Rose Garden, there are a few more exemptions here to flag. They include steel and aluminum, autos and auto parts. I believe we talked about those earlier, but it's also copper, pharmaceuticals, semiconductors, and lumber, as well as any items that might be subject to future Section 232 investigations and tariffs. Those are the national security investigations. So a little bit broad and some leeway there, as well as bullion, gold and silver, and then energy and other certain minerals. So relief for those industries, but I would also caution, Melissa, that it is temporary. A White House official had told us earlier that the reason most, if not all, of these goods are currently exempt is because the president is considering additional sector-specific tariffs on those items, things like pharma and semiconductors.
See, this is what I mean. This is why the market's upset. Like, why was this not announced during his presentation? Why an hour and a half later are we getting additional details when he hyped up April 2nd to be the day we get all the details? And then we have to get more details because he didn't say enough during the speech. Like, this is why I think the market's mad. Like, this is good that pharma and semiconductors and gold and lumber are excluded, but it also feels like they didn't really have a plan and we're getting details on an hourly basis, which is just not what the market wants to see.
Particular, the investigations into copper and lumber are already ongoing. The tariffs could come quickly. So once those tariffs come, those will affect those goods. But in the meantime, and for now, they are not subject to these reciprocal tariffs, no matter where they're coming from. Melissa?
Okay. Megan, thank you. Megan Casella from the White House.
All right. So we got some exemptions. It's going to be time tomorrow to see how the market officially reacts to this. One last check. NVIDIA down 4%. Nike down 7%. S&P down 3.37. New lows for 2025 after hours. Apple down 6.8. Tesla down 6.1. Robinhood down 9.68. Palantir down 7.59. The NASDAQ is down about 4%, 4.19. There's not a lot of volume after hours. So tomorrow at 9:30, we're really going to see if there is going to be a meaningful sell-off, if this is the bottom, if people buy the dip. Tomorrow will be very telling at the market open, but ultimately we're going to find out what happens as we get into the open tomorrow. S&P 500 right here down 3.34% after hours. All right, that's it. Thank you, everybody. Appreciate it. I will see you guys tomorrow on the market open. We will keep going from there. We'll have a lot to analyze tomorrow as I dive deeper into all of these tariffs. And yeah, thank you all for being with me here today. I am sorry about Tom Lee. Again, last minute thing. It happens with these guys. Hopefully he'll be on next week. And we'll get his thoughts on tariffs as well as we get into it next week. All right. Thank you, everybody. Have a good one. See you guys on the market open tomorrow. Bye, everyone.